welcome you to today's session. Uh, we've been trying to wait for quite. We've been trying to wait for the rest of us to join so that we can have a significant number of participants online. So that's why we've been trying to wait. So by the time it's 10 minutes past 12, we would actually start the activities proper. Once it's 10 minutes past 12, we would try to walk us through what briefly what we've done yesterday, and if we have one or two people who would like to say some things, as relating to what we did yesterday, we would also you know be willing to hear us out. So be willing to hear our view about yesterday's training and our expectation as regards to this training. So we are just 1 minute, away from the beginning of that. This is to enable, us to join. All right. And based on the insight that the management have into the activity of that organization, management can take decisive, insightful decision. I mean to say, so we'll look at various reports we have in the system. How important are these reports? How can we generate reports accurately? Because we need to know some things that are important in generating reports. We need to be able to filter use our reports, filter appropriately. It's also called report parameter. We'll look at different kind of report that are available within the QuickBooks Online system, and we also look at a report like the income statement, the statement of financial position, the trial balance, the cash flow statement, and the statement of changes in equity. So we look at other reports like the suppliers reports, inventory reports, customer reports, and VAT reports. So with all this, we want to give you an holistic view of what the system will do and what a typical accounting software should actually give to you. The aim behind the management who is actually providing this training is that we don't just want to train you and you have knowledge on QuickBooks. We're actually giving you enough knowledge that when you use any other accounting and ERP solution, you will be able to navigate your way, through what the system entails. So that's why we're actually taking our time to explain, the rationale behind each of this functionality. We would not just go through saying this is invoice. We want to be able to explain to you so that when you get to use another ERP or accounting system, you would be able to perform, navigate yourself through. The only difference between all these accounting software would be the nomenclature that the manufacturer of the software is have actually tagged them with. But believe you me, they all share similar concepts. So which is why we are here to bridge the gap between the knowledge you have in various accounting and ERP system. So just for a few minutes, we would like to know. We would like to give an avenue to one or two persons to speak and also ask questions. Might not just be not necessarily question. We want to hear your view, just for the next few minutes before I hand over to the facilitator. So I want to hear you. So if you want to speak, please you can uh, go to the chat session or just raise your hand. I believe you can do that. You can do that by the raising of hand. So please, if you raise your hand, we can give you access to the microphone should in case you want to speak. I can see that Ola Jire is actually raising his hand. I would like to know if he wants to speak. Let me give him microphone. All right. Let me allow him to talk. Olajire. Olajire, you have the microphone now. Please, you can ask your question. Let me also enable while we wait for Olajire. We have Marianne. Marianne has also a significant interest to talk. I've also given her access to do that. And likewise, Collins. So, any of you, please, you have the ability to talk now. You have the ability to unmute your mic and speak. So, Olajire, Miriam, and Collins, please, you can proceed. I would like to hear from you.
Oh, good afternoon, Admin.
Yeah, good
Can you
afternoon.
hear me? Yeah, I want
Yes,
to. Yeah, I
yes,
want to
Collins,
ask
we
if I
can hear
can.
you.
Yeah, I want to ask if I can have access to the video offline. No, I clicked the link just now and it directed me to YouTube. The
Yes.
the one the one training video.
Yeah, okay. The one training video, you want to ask if you can have access to it offline.
Yes, sir.
How do you mean we do that? Offline uh, means that you want to. Uh, Maybe I don't get your question. Okay. Well, if you mean that you need to watch them without the internet, it means you will need to download the video from YouTube. So there are ways you can download video from YouTube. You need to do that because that is the only way you can have it offline for offline use. But you have access to it already, and you can just download the video from YouTube.
Thank you.
All right. Thank you so much, Collins. What was your experience with yesterday training?
It was fine. It was cool. As in, I can't really. I don't even know how to express the value I got from it. Enjoyed every bit of it, and I got value. Hear me?
I
Ye-
guess.
Yes, yes, thank you so much for that, Collins. Yes, we got that clearly. We got that clearly. Thank you so much. It's good to know you actually, you know, got value for it yesterday. So, and today promises to be much more better. Okay. So, Miriam, can you have the floor now?
Okay, I want to ask, hello, can you hear me?
Yes.
Yes.
Okay, please, I want to ask, please, how do I get the manual? Because I tried downloading the manual, it's not going. The manual for this program, like the day one and day two manuals.
Okay. There's a link in your. There is a link in the email we sent to you. Once you click on the download manual, it should download the manual to your device, depending on the device you're
Okay,
using. Yes. If you check, do
okay.
you receive the day one training video we sent to you?
Yes, I did, but I tried opening it, they referred me to YouTube. So, of which I
That's
tried downloading through YouTube.
no, 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 no. That's the video. For the manual, if you check the email we sent to you, there is a download button for the manual within that email. So just click on the download button, you will get the manual. You
Okay,
understand? So
sir.
we've attached it to it. Yeah.
Okay, sir. Thank you, sir.
Yeah. Thank you so much. All right. Uh, okay. If that would be all, because I think that is all that we are yet to see any other person raise hand. Okay. Please, if you still like to talk, we'll still like to take at least two more. So once, okay, this is Abdul Karim. Abdul Karim would like to talk. Abdul Rahim. Yeah. So we can take one more person after Abdurrahim, and that will be all. All right, so let me allow Abdurrahim to talk. All right, Abdurrahim, please you can unmute your mic now and speak. So we also have Ola Dele. So I've also enabled Ola Dele to speak. All right, we have Ola Dele and Abdurrahim. Please, you can unmute your mic and speak.
Hello.
Yeah, hello.
Good afternoon.
Good afternoon, Oladile.
Yes, sir. Thank you for this privilege given to us to partake in this training which you did. My question is based on the yesterday's training which was
Okay,
presented to us under the processing supply documents.
okay,
So what I want to get about is our purchase order processing and supplier invoice. Is purchase order processing and supply invoice, are they related together?
okay,
Reason is that
Okay.
reason is
okay,
that when you maybe in place where I work, maybe you want to do some evidence. When you ask for invoice of this, what they may say that okay, we didn't have the invoice, we have the purchase order, which we can also accept if the value of what they purchase are related. So we pick that as evidence pending maybe invoices is being given. So my question, that's why I'm asking about this question, that are they related?
okay. All right. Thank you so much for that question. I will quickly provide, information as to your question. To answer that, I will tell you that purchase order processing and supplier invoice are actually related. They are two. They are one of those many documents that will be used, during the purchase process of an organization. So,
Okay,
but their implication and their functionality within the system actually differs. You
okay,
understand? So, meaning that you need to know who is actually which. You need to know the importance and the usage of these two documents at each point in time. So now let me just give you a quick run through of what the flow is all about. If entity A wants to purchase item from entity B, so what entity A should do is that entity A is to look at the catalog of entity B and request for a document called quotation. So it means that entity B, if entity B is using an accounting software, entity B will go into the system and generate what they refer to as quotation. So it means with that quotation, entity A will have idea of the number of items that is available and the price of those items that are available. You understand? So entity A has gotten quotation from entity B. So if entity B now makes decision as to what they actually want to purchase, they will not agree internally and raise a supplier's purchase order. Can you see now? Entity A, which is the entity that is buying, will be the one to raise a purchase order, stating clearly to entity B that we need you to supply us the 5 pieces of this particular item, 20 pieces of this particular item on suppliers based on the quotation that they've actually provided to you. So it is just a mere document within the system giving instruction to entity B to supply you this item. So the fact that you raise a supplier purchase order within the system doesn't mean that you've received the item. The system will not pass any accounting entries. You understand? It's just an instruction, just like a document that you will share with entity B. So if entity B receive that particular purchase order, once they are supplying you that item, they can now, based on various scenarios, they can actually create sales order. But we don't want to go into that kind of analysis. Let me just put it simple. They will just create their own customer invoice within the system and dispatch that item to entity A.
entity A.
So once
Okay,
that is done, you understand. So it means the customer invoice that entity B has actually created will be a supplier invoice for entity A who is buying the item. So when entity A received that invoice, they will see that their supplier, which is entity B, has actually provided them with an invoice. So you can now see that And if we are talking from the perspective of entity A, the purchase order, they will have to be the one raising it. But the supplier invoice will come from the supplier, which is
So
entity B.
it is B. Okay,
Do you
thank you.
understand?
I get your
Yes.
point. I get your point. Though what you said is right, which I understand, because what we need from there, in a audit process,
Yeah.
when you are doing the audit, because when an auditor requests for this, and the client said they didn't have the invoice, but they have the purchase order which they sent, and what they itemize, maybe this is what you should supply to us, which stipulate their price and everything, they VAT into it, which they've already agreed. So we pick on that. The pending you provide us this. So that's why I asked the question whether this is related or not. Though I thank you for this explanation which you give to me. I really appreciate that.
Right. You are welcome. You're welcome. So,
Okay.
basically, like you said,
Um,
uh, what audit we just need the purchase order documents for after they've gotten the supplier invoice is to actually establish authorization. Who authorized, you to purchase those items? You
yes.
understand? So, thank you for that, and we
Okay.
really appreciate your question as well. So, we'll not be taking any further question. We'll be going into today's activity proper, and we want to start. So let me disable users from talking now, so that our facilitator can have the ground to start today's training properly. So we all want to believe that you are already in the WhatsApp group chat that we created. So we'll be using that platform, to share, you know, important message across to pass important message across to us. And peradventure, if we are using the system and we have any challenge, you should feel free to be able to drop it there, and actually, uh, so that we can answer your question, accordingly. All right. I want to believe my facilitator is ready for us to take us through today's journey. Mr. Aziz, thank you for yesterday's session. Please, we are ready for your lecture.
All right. Thank you for that. Good afternoon, everybody. It's good to have you around as usual. All right. My name is Aziz Adeume, and just like my colleague introduced, I'll be one of your facilitators, for today's session. Okay. So, before we start right into it, a quick reminder that our firm's name is Droidedge Consulting, and we are, software consultants, right? So we provide seamless business management solutions, right? We do customizations, training, and support for our respective clients, right, across several industries, right? So we are partners with Zoho, Sage, Microsoft, of course, just to mention a few, right?
QuickBooks.
And yes, QuickBooks, yeah, and also we, just like I said, we are into sales of business management solution, and we also configure properly now. We help configure, these business management solutions, from accounting systems to, full-blown ERP systems. Of course, like say 300, like Sage S3, we do Sage 200 Evolution, say 300 people, Sage Business Cloud Accounting and Payroll. Then we do Zoho Books, Zoho CRM, and a couple of other Zoho softwares, right? Likewise, we do configurations and training on QuickBooks, from QuickBooks Desktop to QuickBooks Online, and also QuickBooks POS, which is a standalone and an integratable, POS system. Yes, so our contact is being displayed on your screen, right? Should you want to reach out to us, please feel free. Also, feel free to send us an email, right? And also, our website is at www.droidedge.com, right? So today's training promises to be very much exciting, just like I told us yesterday. So today we'll be looking at, transactions proper, right? And we'll be looking at scenarios that could play out, and because we are making use of, business case scenarios. And just like one of the participants asked, I think I guess Oladele, if I'm not mistaken, he asked about, the relationship between the supplier's purchase order and the supplier's invoice. In relation to accounting systems now, those are what we'll be looking at extensively, right, in today's class. And today's class promises to be very much exciting. Okay, so just to do a little reminder of what we looked at yesterday, right? So yesterday we were able to run us through, accounting systems, and we were able to look at QuickBooks Online, what QuickBooks Online stands to give you, and it being a cloud solution accessible anywhere, and it being, relatively cheaper than most of other accounting systems. We looked at that yesterday, and we were able to also differentiate, between an accounting system and an ERP system. So when we are out there right now, we can easily say, okay, this is what an ERP system is, and this is what makes it differ to an accounting software. And we can be able to also give quite a number of examples, right, of ERP systems, and give examples of accounting systems also, right? So we looked at how we can configure our software when it comes to QuickBooks Online, right? So we looked at configuring the software, setting it up, couple of default settings that we need to look out for, you know, full scale. And we looked at examples of what a chart of accounts looks like, and now we can chart an account, right? So now we can chart an account. Yesterday, and we were able to equally add a couple of accounts, and we told us what are those things that you need to always look out for. And now you should always assign general ledger codes, right, to your general ledger account. So we looked at that yesterday, and yesterday also we were able to create what we call master files, right, ranging from right? Ranging from inventory items, different kinds of inventory items that we have within QuickBooks Online. So we explain to us what inventory is, what non-inventory is, and what service recorded item categories yesterday, and we're able to assign relevant ledger accounts, in terms of revenue or sales, as you may want to call it. We also looked at, assigning cost of sales ledger and also inventory ledger, to inventory items on QuickBooks Online yesterday. Yes, we were also able to create relevant information as to our suppliers information and our customer information, right? Then we talked about opening balances and how opening balances works, right? Couple of differences between what an opening balance is and what closing balance is. We looked at the relationship, and we equally looked at the differences in terms of context, right? So today is about transactions proper, right? And we'll be making reference to, our class exercise documents, right, that we equally shared with us, via our relevant email address. Okay, so today we'll be looking at suppliers document processing, be processing purchase order, suppliers invoices, looking at the differences. We'll look at vendors credit, suppliers payments, and we'll look at what would happen, when we do some of these things, same as customers, related transactions, and some inventory related transactions, right? Like item adjustment and the likes, right? And we'll look at journal entries, and we'll look at also relevant reports, right? As they may also always play out in typical business scenarios, right? Okay, so having said that, let's get right into it. Please remember, always drop your questions for me. Even if you can't hear me clearly or anything at all, you can always let me know. And before we end today's session also, we'll be giving room for some of us to still further speak, right, on one or two areas as a form of feedback also, right? Okay, so and please do not be late session. So also be reading questions. Please feel free to drop your questions so that we all can look at it together. I am learning from you, then also only learning, right, by virtue of attending the training. All right, let's get right into it. So before I proceed, please confirm if I am still audible enough and if you can still hear me so that we all will be, on the same page. All right, so I'll look forward to our confirmation. Right. So while you do that, let me try signing in into my QuickBooks Online application. Right. Just like I said, for you to access your QuickBooks, you can easily go to your URL, accounts.intuit.com, then /app, right? Or better still, could you just go to Google, right? You can easily go to Google and type in QuickBooks Online, right? And the system takes you to the login page, right? Where it takes you to QuickBooks Online page. Then you can click on sign in by your top right here, right? And when you click on sign in, the application takes you to the login page where you can now input, remember, your email address and your password. Okay, so because I have this saved already, so I'll click on sign in. And remember, QuickBooks Online has a mobile phone application. So after creating your account, you can always download the app on Google Play Store and also on your iOS, app store, right? So you can always download and see, can always play around it and see how it works, right? Okay, so I'm logging in. Let's see. Okay, okay. Yes, we are in. We are logged in now. So remember, her company name as at yesterday is QuickBooks. Sorry, is Bill Gates. Nigeria Limited, right? And remember, from what we were doing together yesterday, we said Bill Gates, Bill Gates Nigeria Limited, is into phones and laptops, and that gave us room to create, a couple of items and also revenue and cost of sales ledgers, right, in our chart of accounts. So remember, I just want to remind us on that. Okay, so now we'll be looking at suppliers related activities, right? And what are those activities that you are allowed to do, when using QuickBooks Online? If you want to do any suppliers related activities, remember, you can always go to uh either of these two options, right, would work. It's either you click on your expenses module, yeah. On your expenses module, you have expenses and you have suppliers, right? You have expenses and you have suppliers. So here you can always click on suppliers, right? And haven't done that, you can locate a supplier, let's say Aziz Nigeria Limited now, and click on the options. Then from the options, you can easily say, do you want to create a purchase order or do you want to create a bill, right? That is one step, right? You can equally go from the new button here. So I would always advise, right, you go to the new button that you have here. So new is simply saying it's either you want to create, a source document or you want to view existing documents, that have been created, right? So that's one way to go about it, right? Then another way, just to take us one step back, is coming back to this expenses module, and you go to this supplier screen. Let's say you just want to view couple of purchase orders that has been raised or any invoice that has been due, and all. you can always make use of these filter buttons. So if I click on zero purchase order, if I click on this purchase order screen, it gives me, just those purchase orders that have been raised, right? But it's always good to have it noted that the best way when working with QuickBooks Online, should you want to do any transaction at all, right, the best way to go about it is to click on your new button. So if I click on my new button here, you see it's been segmented into customers, suppliers, employees, and I have others, right? So for the purpose of this training, I'll be zooming in and zooming out, of my Chrome application, just so that for some of us that are joining with our mobile phones, we can have, a better view. And always remember, you can always equally, you can always zoom, right? You can zoom in and zoom out from your hand too, if you are using a mobile phone, just to see some specific screen, much more better. Okay, so for I've clicked on new, then I'm on vendors. You can see we have series of, transactions, that you can actually raise, right? When it comes to suppliers, right? And one of those things that you need to note or will be starting from is what we call purchase orders. Now, let me explain, what some of these things and we can just get it at a glance, right? Now, remember your purchase cycle, would most likely start from a purchase order, right? And we'll be starting from purchase order, right? Purchase order simply is a document that you send to your suppliers to say, oh, we want you to deliver this, and this, right? And we'll look at that extensively. So we have purchase order, but remember, from purchase order, it goes to what we call bill. So bill, another name for bill, is what you call supplier's invoice. So I've seen instances where, a couple of people would say, we are not seeing any avenue, to do suppliers invoices on QuickBooks Online. Always note that rather than you calling it suppliers invoice on QuickBooks Online, it's called bill, bill, right? And a bill is what you raise, in form of suppliers invoice, right? Then when you have a bill, you can always choose to say, okay, you want to do, if you want to raise a supplier's credit note, then you have what we call supplier's credit. And we'll be looking at instances that would involve such, right? We'll look at instances that would involve it. Then we have also expense, right, which is your typical expense, right, that you want to raise. And we have what we call credit card credit, and we have, of course, check, right? But we will be starting from purchase order. Now, with reference to our class exercise, right, that we have here, we said during the year, right, we made some inventory purchases, and we made some payments to our suppliers, right? And you see that on the 2nd of January 2022, right, which is Greenwell Nigeria Limited, which is our supplier. So we bought HP EliteBook laptops, 6 units, at the rate of 10,000 naira per unit, right? And we equally bought HP Pavilion, which is 5 units at the rate of 120,000 naira, right? So how do we go about this when we are given this kind of information, right? Now, it needs to be noted that in doing this, right, some organizations, purchase workflow differs. Some organizations would start, from what we call purchase order, right? So I'll be clicking on purchase order. And when do we raise a purchase order? In a typical business scenario. Like my colleague Olabi tried to explain to us at the start of this class, that the way it happens is this. Now there would always be need. We already know that internally we needed to purchase, some items, right? So we needed to purchase some items. We could, put a call to our suppliers to say, oh, like a form of inquiry. We'd like to inquire if you have this item, and that item, right? Uh, we need to have what we call your quotation. Can you give us your quotation? Bill Gates Nigeria Limited is calling Greenwell now to say, please, or we are writing them via mail that, oh, we will need a quotation or an estimate for this set of items, right? So in that instance, Greenwell, who happens to be our supplier now, can now send us, what we call quotation. The quotation they are sending to us is just to tell us, or it could be quotations or catalog to tell us that this, is what we have in store, and this is the amount we'll be willing to sell to you, right? We could look at that quotation and to say, for our own internal consumption, we could say, oh, we don't, this cost is quite high, rather than buying, a certain quantity, say 20 pieces or 20 units of this item, we might be going with, fewer quantities now, simply because of, our cash flow, right? We can look at that, and if we are able to agree on the exact quantity that we want, right, and at the cost at which we want to buy it, we as Bill Gates Nigerian Limited can now raise what we call purchase order, right, within, our organization. So we can raise a purchase order, of course. Would have gone through approvals and the likes internally. Then we can then send that purchase order to, our supplier, who in this case is going well, right? Now, always note something. Purchase order, is just an instructional document, right? When working on any accounting system at all, or an ERP system, when you raise a purchase order, right, within the system, you should note that it doesn't have any financial implication. It doesn't pass any accounting entry, right? It doesn't have any financial implication, because it's just an instructional document telling, your suppliers that we need this set of items for you at this cost, right? We could even put in our terms to say we need them to deliver between so period, right? Because the purchase order we are sending, remember, it could either be honored by our vendor and might not even be honored. We could send them a purchase order and they don't have enough quantity to supply us, right? So that could happen, that could play out, right? So it is only when they supply us such item, or when they provide us such service, that is when we can then go ahead to do what we call, supplier's invoice. But remember, right, when you raise purchase order on any at all, on any accounting system and ERP system, right, it doesn't affect anything. So you can raise as many purchase order as you want, right? So it doesn't have any accounting or financial implication. And that is the same way, it is also, in as it is now. So if we are sending you, who happen to be our vendor, a purchase order, that doesn't mean that we are totally indebted to you as at that level. Then of course, until you supply us, or until you send us what we call a pro forma invoice, right? So it is until we get your invoice, or until you supply us, that is the only period we will then be indebted to you. So having explained that, let's now raise a purchase order, right, within the system. And remember, when using a software, in some organizations just go directly, to raise suppliers invoice in the system, right? So you could start from a purchase order and proceed to, converting such purchase order to a supplier's invoice, right? But a purchase order is just an instructional document instructing your vendors to say, supply us this item or this service, right? And it is until when they do that, they cannot hold you to ransom, right? To say, oh, we have a purchase order from you, and you are totally indebted to us, unless we have some kind of separate agreement, right? Or in that context. Okay, so let's raise a purchase order, and when we are raising a purchase order, let's look together some of those things that we need to look out for, right? So at first, there's need for you to select your supplier, right? And with reference to, our class exercise here, our supplier in this case is Greenwell Nigeria Limited, right? So from here, we'll select Greenwell Nigeria Limited. And there are instances where, at the point of selecting a supplier, you might not have, created that supplier in the first place. But one thing you should note is QuickBooks Online allows you to do what we call creating on the fly, right? It simply means, even at that, right? Let's assume we don't have Greenwell Nigeria Limited here. We can actually click on Add New, right, to create a new vendor at that level. But for me, right, it's based on practice, based on best practice. We wouldn't just advise you just click on Add New, right? Because there are some things you need to look out for when creating a supplier. And we would always advise you go to the list of suppliers coin, right? It allows you, it helps you in two ways. Firstly, when before creating a new record, always search your system to be sure that you don't have such record existing before. Now, this supplier is called Greenwell Nigeria Limited, right? For the person raising, or creating, or who had created that vendor earlier, we might have created the vendor before, but being called another name, or called, instead of grain, let's say we omitted the first G, mistakenly, and we now have Rainwell Nigeria Limited. It's possible, right? So before you are quick to create a new record, be it inventory item, be it suppliers or customers name, go into the system and search properly to be sure that you don't have such item or such record created before. And secondly, we talked about categorization, right? If you just want to create a new record here, you might not be aware of the level at which the records are being categorized, right? But when you look at your list of suppliers, you can easily see, even when you are new in an organization, you can easily see how where they categorize their records, so that when you are creating a new record, you would always follow that pattern. Uniformity is always key. That is one way or one thing you use to distinguish, accountants that are very, very attentive, digital accountants, like I call them, right? Those are ways you would know. When I look at your master record, I need to see some level of uniformity in terms of the way you create your records and in terms of your categorization, right? So, but QuickBooks Online allows you to do that on the fly, but I always recommend, you go to the list of suppliers and, do the needful. But at the same time, some organizations process would not give you enough room to go and be searching and all. So you can make use of the hardening functionality. So I would simply select Greenwell, right? And once I do that, you see that the system would have, given me the relevant information as to the email and address that we must have assigned or imputed at the point of creating the vendor, right? Okay, so purchase order date. When is our purchase order date? So the purchase order date would actually be the date you're actually, raising that document. The date that document was actually, approved and all, is the date you intend to send out to the purchase order to the vendor. So it is equally important. Dates are important when using a software, right? So with respect to what we have in our class exercise, we have 2nd of January, right? So I'll just select 2nd of January here, right? And you remember I talked about location, right? I said we can always use location to segregate, how our transactions report. So let me, for the purpose of showing us how location works, so let me create, this location to say we want to track, our profitability based on region, right? So let me use state. Let me say Greenwell is in Lagos, so I'll just click on Lagos as a location and click on save, right? So now, when we are raising purchase orders, right, QuickBooks Online allows for two, set of options, to be selected, on our line detail. So this aspect where I selected the supplier and the date and the location and anything, is actually referred to as the document header, right? So now on the detail aspect, the very first thing you need to check here is your amount. What form would you want them to be? Do you want them to, the amount you are stipulating there, is it exclusive of VAT, right? Or is it inclusive of VAT? Remember, I told us the difference between these two yesterday, that exclusive of VAT simply means the amount you want to indicate here, does not have VAT element in it yet. And you could either choose, if you want the system, right, to now calculate VAT additionally on the amount you want to state. Do you understand? That is you stating exclusive, amount. But if the amount you are imputing here has VAT element in it already, you can actually change this option to inclusive of tax, which is the tax in this case is VAT, value added tax, right? So now, you can choose whichever you want to go with, right? So for the purpose of this training, I want to go with exclusive of VAT, of VAT, of course. So I want to be able to tell the system, if the amount that I'm putting here, if the system should add VAT to it, or not as we proceed, right? So that is one thing you need to note, that you need to always look out for, and for you to know that that is how accounting systems work, right? They always have exclusive amount and inclusive amount, and you should be able to state the differences. And in your organization too, you can put it to practice, and you can always ask that, oh, you need to know, do you charge VAT? And if you do, right, you need to know that, oh, these are our prices. Are they VAT exclusive or are they VAT inclusive? And it helps you, to know that you are in the right path, and those things that are needful, right, in your business environment. So having said that, we have two nature, right, of what you can select on your purchase order or supplier's invoice as we proceed. We have category and we have items detail. What's the difference between category and what's the and items here? Remember, items here refers to those set of inventory items that you've created, be it service, be it physical, right, or be it bundle. Like I explained what bundle is to us yesterday, right? So that is one. And another thing is category here refers to merely selecting what we call GL accounts. There are some instances where some companies, they don't get to select items on their purchase orders. Rather, they select what we call ledger accounts. Let's say the vendor is providing you cleaning services. Remember, you might not, if you don't deal with cleaning services, as you don't deal, you don't generate revenue from cleaning service, you don't invoice your customers on cleaning service. So you might not necessarily create cleaning service, as a service item, right? Because you don't really deal, with it, right? So you can, for such, if you want to raise suppliers invoice or suppliers purchase order on such, you can actually make use of your category, right? And remember, what you have on your category will literally be, your set of ledger accounts. Note that when you talk about, category here, when it comes to raising, a source document on QuickBooks Online, when you hear someone talk about category, always know what they are talking about is selection of GL accounts, right? But for the purpose of our training, right, I will be closing this category part. We'll be making use of items because we are dealing with items, right? So you see instances where categories will come to play and instances where items will come to play, because what we are dealing with are items that we created in the system and are items that we are dealing, with directly, be it by virtue of selling, or otherwise, right? So for our purchase order, so for going well, remember we are selecting, we are going for, we want to raise the purchase order for 6 units of HP Light book, right? So we'll just come here, our product or service. So we have, from here we'll select from our options, right? This is HP Lightbook laptop. I would select that, right? Do we want an improvement on the description? Now you might want to further go ahead to say HP Lightbook laptop, and you want to, be more expressive in terms of your description or the nature of what you want. You can say SPLite laptop 500 gig and SATA drive and all that. You want to just indicate that folder. The description column allows you to do that, right? So, but just to move faster, we are going for 6 units of this, right? At what rate? At 110,000. So I can just type that in, right? So the total amount is 660. Then here, remember, the amount here is exclusive, right? So I can then go ahead, right, to say that, oh, I would want the system to charge 7% VAT on it, right? Or I could say, oh, this set of items, if it won't be charged VAT, or if those set of items are not vatable, right, I could select no VAT, right? If those set of items are not vatable. But in this instance, and with respect to our legislation, such an item will be vatable. So we'll select 7.5, right? And like I said, you know, remember we created what we call class. We enabled class yesterday, same as enabling location. And we stated that class, can be regarded as cost center, right? Class can be regarded as cost center. So I can create, for a cost center, I can create HP, right? I can create HP and couple of other things as my cost center. My cost center could equally be department. Your cost center could be anything at all. Even your cost center could be personnel. You want to know, revenue and expenses that you are getting from, some couple of, and your cost center, your cost center, your class in this case, could equally be used, as like a sales rep functionality, right? So that is, one thing about that, right? So I want to move to the next line. Remember, our purchase order entails, two items, HP Pavilion also. So it entails two items, that we want this vendor to supply. And it's two items, right, at uh, 5 units, right? At how much? At 120,000. So at 120,000, and we want it to be vertible as well, right? So this is equally HP. So I will select HP. And now you can have more lines, right, as you wish, right? But always note that we, we could this is a purchase order that we are sending, and with respect to our class exercise, we only have two items, selected there. The reason why you are not seeing description in this second part is because while I was creating this item, HPLI book, I indicated, the description. But in this instance, I didn't do that for my HP Pavilion. So I could either go back to my item list to include, the description, or I could just type in this, and while I go back, much later to do the needful. Okay, so yeah, do I have any message that I want to, attach? To say, oh, this should be honored within 14 days. This is our payment. How many of those things I can actually indicate it as a message to my purchase order? And do I want to have, external source, attachment? Do I want to have maybe another attachment that I want to? It could be pictures of what this system looks like or anything. You can QuickBooks Online allows you to attach, any document, or any file it is that you want to attach, like you see that I've done there, right? So I haven't done that, and I can choose to say I want to attach it to, to the email I want to forward to my vendor. So I have done that, right? And what do? I can easily click on save, right? I can choose to print, this purchase order, of course, and I can choose to save and send, right? What is the difference between all of this? Save simply means I'm only saving it, right? And save and close simply means I'm done with it. I'm done. I just want to raise it and all, right? Save and new simply means I have raised the purchase order, but I want to create a new one. Could be to another vendor in this case, right? And save and send simply means I want to, now that I'm raising the purchase order, I want to send it to this vendor's email directly from the system, right? QuickBooks Online allows you to do that. And that's one of the beauty of having a cloud solution. So rather than you printing and do scanning and sending, no. You can actually initiate it directly from your software and click on save and send, then you are done, right? But for the purpose of this class, I want to click on print, and by the time you click on print, it simply means you are actually done, raising that purchase order, right? And you have a preview of how your purchase order looks like. And I can choose to download here, right? And I can equally choose to print. So downloading here simply means I want to download, for my own, use. Could be as an attachment or anything. So this is what the purchase order document looks like here, right? This is what it looks like. And you can see the details indicating the VAT and the amount. And this is the total amount, that we have here. Okay. So having said that, right, that is how you raise, a purchase order, right, within QuickBooks Online. And remember, we said purchase order does not affect anything. As at now, you still have, the same quantity of item that you have at hand, even before raising the purchase order. A purchase order in this case is just an instructional document. It's not really a document that could make you indebted, right, to a vendor, right? So you're only telling them to, so until the vendor now sends you a pro forma invoice, or you have a kind of arrangement, or a personal, set of agreements, that is when you can only be indebted, by you sending a purchase order to a supplier, right? And always note, that purchase order, does not have any accounting entry, in your accounting system. Okay, so now we've raised one, so we have two more to go, right? So now what I will do for the purpose of the training is, for the other two, what we'll just do is to raise a supplier's invoice directly. So remember, we could start our purchase flow from raising a purchase order in the system, and in some organizations they just go ahead to raise supplier invoice, right? And you will now see the difference between these two, right? They look alike. One transcends into the other. It's a purchase order that transcends to becoming a supplier's invoice, right? So now we've raised a purchase order, but the question, the exercise is telling us that we purchased, so it had happened, right? It's so they actually made that delivery. And when they do such, what do? We convert such purchase order to a supplier's invoice, right? And for us to do that, right, we can do that in two forms, right? What do I mean we can do that? What do I mean by that? So in the same vein, we can come to expenses suppliers mode, and we can click on this set of purchase order, right? Remember, what we want to do is to convert a purchase order, the earlier raised purchase order, we want to convert it to a supplier invoice, because we want to believe, or in our scenario now, the supplier has delivered, and we are able to see the quantity that was being delivered, right? What do? We have some set of purchase order that are open by clicking on this blue button called purchase order, right? So we have a list of our previous purchase order, and you would easily see if it's open, if it's finalized, and all that, right? So what do we want to do now? We want to convert the purchase order to a bill. The bill here is supplier's invoice. So we click on create bill, right? That's one way to go about it, right? And you can easily go here. That is one way. Another way of going about it is to click on new here, right? Then you select to say you want to create a bill. You want to create a supplier's invoice. And here you can select the supplier you want to do a supplier's invoice on. And you see, the moment you select the supplier, if there's any bill at all, that is, if there's any purchase order rather, that is, open, QuickBooks Online will give it to you, as an option here to say, do you want to select? Do you want to make use of, this purchase order 01 that is here, right? So in this case, that is what we want to do, right? We want to create a bill with respect to an earlier raised purchase order, right? Then what do? We click on open, right? So we click on open, okay? So sorry about that. So let me go one step back. Bill, right? So we click on add rather. So here you click on Greenwell, which is the supplier. Then you click on add to say we want to add that purchase order. We want to imbibe it in our bill. Remember, this is the bill screen, right? This is the bill screen, which is the purchase order. So we want to convert that PO. This is the bill, which is a supplier invoice rather. So we want to convert that PO to a supplier's invoice now. So now, what is the date? The date of the delivery, or the date of the supplier invoice here. So we want to be able to select. Was it still the same date? Remember, our class exercise is saying 2nd of January here. So we select that, right? And we now proceed to the detail part. From our purchase order, how many quantity were being delivered? Is it still the same 6 that are being delivered? Because in some instance it could vary, right? We could send them a PO for 6 and they're only making a partial delivery of 4, right? Or they're only delivering one of those items. So you need to factor that in here. But with respect to our class exercise, they delivered the whole of 6 and of Allied Book, and the whole of 5 of HP Pavilion, right? And it's still for the same amount. There are instances where the amount might have changed, right? But it's still for the same amount. So we'll just make do with that. And what do? We'll click on save and close, right? To raise that supplier's invoice, right? So on that note, we've been able to convert a purchase order to a supplier's invoice, and it is as simple as that. So we now see the scenarios that could play out when you get to raise purchase order, and at the point you get to raise, supplier's invoice, right? So I haven't done that. I haven't said that. I would just click on save and new, right? I want to easily click on save and new, right? Because I want to use that opportunity to create, other suppliers invoices. Okay, so please confirm if I'm still very much audible, right? While I proceed, because I'll be moving, real quick. So we want to proceed to doing the second item here, which is that AC Finance, which is our supplier, right? Remember, because we don't have any purchase order that is outstanding for this vendor, there is no pop-up screen, just like we had, at the point of doing the initial one. So here was the date, the date 2nd of January. We select that also, right? Yes, location, let's do target as it being Lagos, right? So amount exclusive of tax. So what we are dealing with is items detail, right? We just want Samsung A21 5 units at the rate of 65,000. Okay, we just select that. Okay, Samsung A21 here. Okay, I didn't declare this too. So 5 units at 75,000. That VAT, yes, there is VAT on it, 7.5. Right, we proceed to the next line item. Samsung S22 Ultra, which is 2 units at the rate of 200,000. Okay, so the initial amount here is 65. So, and you can always type, right, to make it much more faster. Okay, so we don't have that item created yet. I can easily click on add new. Okay, so what do I want to add on that fly? I want to create an inventory item. So this is Samsung S22 Ultra. So I would include it as that. My category, Samsung. Is there any class? No. This no. So this is F31 2020. Sorry, 2021. Okay. So yes, inventory assets. So this description. Selling price, when I sell this item, I wanted to go to revenue for phones. All right. So description here. Then when I buy, okay, this should go to cost of sales phones, and okay, save and close there. So what I did there was to just make provision for Samsung S22 Ultra, right? So how much? This is 2 units at 200,000. So okay, so there's 7.5% VAT on it too. Okay, so here, let me create a class Samsung, right? Like a cost center, right? I want to be able to see my revenue and also my cost with respect to this brand, right? So I haven't done that. I want to easily click on save and new to help me with the last one there too. Okay, so the last is still the same date actually, right? So okay, so this is Pan Ocean rather. We have it created. Okay, now what date? Okay, so I could take that to be 5th, or okay, let's go with third. Let's go with third, right? Then one thing that we have here is terms of payment. The due date. So in business case scenarios, when you are dealing with your suppliers, of course, when they send you their suppliers invoice, they could indicate there to say, oh, this should be due on receipt. It means it needs to be settled immediately. They could say, oh, in 50 days time, the due date on it is 30 days. So that is what you call terms here, and you can always indicate it. so that your system would know, system would be able to give you, those suppliers invoices that are due, for your payments. So now let me make this, yeah. Okay. So remember, we have category, we either have category or items. So I'm dealing with items also. Then what's this? So yes, this is iPhone 8 3 unit at the rate of 75. Okay, so I can type in, sorry, I can type in, okay, oh, rated iPhone 13 rather. So remember, these are just imaginary figures. So I know there is no way you would get an iPhone 13 for this range, but let's just go with it. Okay, so now this is 75, right? And that's the total amount. So remember, we can always still indicate if it's vatable or not. So in this instance, it's vatable. And this is, let me create a new class, purposely for Apple, right? And I'll do that. Okay. So this is the essence of making use. We only activated this class, and for what purpose? For us, for it to serve as a call center, so that when we are generating our report, we will see how it works. How we can easily say, okay, we want to know our revenue, right, and our cost also. We want to know our profitability on Apple product, on HP product, on Samsung product, and any other brand that it is, that we may have, right. So I would select that, and that will be all here. Then I will click on save and new, right. And that is how you go about what we call bills, which is equally called suppliers invoices on QuickBooks Online, right. So we've looked at differences between a purchase, or when a purchase order is to be used, when the suppliers invoice is to be used, right. So, and now when we raise suppliers invoice, two things happen majorly, when you are making use of accounting systems, right. The very first thing is to say that, be it a ledger account that you selected, or be it, the inventory item that you selected, it will be affected. Now, because we've raised the bill, simply means our item has increased by that quantity and that value that we imputed, right? And also, it means that we are owing our suppliers now, right? So now, so supplier's invoice is now being regarded, is not an instructional document now. Rather, it's a transactional document to say that that transaction has actually occurred, right? So now the system would have debited your inventory and credited your vendor, right? And that is how it works. So now you are owing your vendor, and you owing your vendor has equally translated to an increase in your inventory item. So when you check your inventory report, you'll be having that quantity on hand. And that is what happens when you are using an accounting system, right? Or an ERP system, right? You need to note that. That is what happens. That is what suppliers invoices, do to you. And to go further, we have moved away from suppliers invoices, which is called bill, on QuickBooks Online, right? Now we want to move to what we call suppliers credit. Remember, there are instances, right, where, that item, those set of items that the suppliers have supplied, right? It could either be that, some set of items are damaged, or they are inferior, right? And we want to return them. It happens in business case scenarios, right? So when you want to do that, when you return that in your life, as scenarios, right, and you want to incorporate that into your system also, then you raise a source document. And what is that source document called? It's called a supplier credit. A supplier's credit, is actually the source document you raise in this instance, right? So now, to raise a supplier's credit, what do we do? You navigate to clicking your new on your application also, right? And from the list of source documents or a set of functions that you have here, you click supplier credit, right? So now another beauty of QuickBooks Online is this. I might want to do I might want to carry out an activity, but I don't want to disrupt my current screen, right? What do I do? Now, I did something just now. Now, I want to raise a supplier's credit, but I don't want to leave this coin. I will come to new, then I would right click, right? And if you are making use of your phone, if you are making use of your browser on your phone, you can, place your finger, on that function, hold it down. Then from the options, you can actually open the link in a new tab. So which is what I want to do now. So I want to raise a supplier credit and I would open it in a new tab. And I told us what a supplier's credit does. In some softwares, it's being called supplier's credit note or supplier's return. And it only occurs when you want to, it occurs, you make use of it in two instances. Number one, when you are returning some set of items, that you must have received earlier from your vendors. And also, you equally use it as a reversal document for your suppliers' invoices. You can't write off the fact that when using a software, an instance could happen where I had raised a supplier's invoice in error, which in this case is called bill. It could be an error in date, it could be an error in the items that I selected, and it could even be an error in the supplier's name that I had selected. If either of this should happen, if you are being asked that what is the reversal document that you raise in QuickBooks Online, the reversal document is being called supplier's credit. In some other systems, it's called supplier's credit note. In other systems, it's equally called return to supplier or supplier's return. So either of the name, that is why my colleague Olabi told you at first that, most of these softwares work alike. It's just that their nomenclature, the names at which they call, some of these activities might just differ. But when your knowledge you have here can always work for you, when you are using other systems, because they actually work, majorly, most of them work the same way. So now we want to now raise suppliers credit, and I told you, remember, you could use it in two instances. Number one, you could use it, when you are returning, physically now, you are returning some set of items to your supplier, right? And secondly, when you want to use it to reverse, an earlier posted supplier's invoice, which is called bill, right? In this instance. So now let's assume, right? We want to assume now, right, that from, this set of Allied Book laptops, we are returning one of it, right, to our vendor, right? One of it was returned, right? And remember, the vendor in this case is going well. So what we'll do here is to select going well, right? And when we do that, so we also want to, indicate here, what what is the item that we are returning, right? What is the item that we are returning, to this vendor? We can, from here, we would select that we are returning our highlight book laptop, right? What quantity? We are returning one. What was the rate? And you can equally do a supplier's credit, also directly on a bill, right? There are instances, where you do that too. So now, also, you should also remember that QuickBooks Online allows you, for some people, when you make errors on your supplier's invoices, right? QuickBooks Online actually gives room for editing. You can actually edit, that rather than you raising supplier's credit note to reverse, an invoice. You can actually still edit it. It allows you to do that. That's one other thing, that I want you to note there. Okay, so I would select sorry, I would select, remember we incurred VAT, and this is on HP, right? And on this note, remember, this is just what was returned, right? And I could come here to do either save and new or do save and close. But one thing is also fundamental, it is the date. The date is very, very fundamental here, right? The date here would actually be the date that you returned, because you could buy an item like we did on the 2nd of January, right? And we only go to return that item on the 5th, right? So you are selecting that 5th of January, because what the system will do is, that supplier's credit, this supplier's credit equally affect two things. It affects your supplier's balance, which will be reduced because you are returning that set of items to them, and it equally affects your inventory. The movement with your inventory item is being affected, right? So it is the date you are imputing on this source document that would reflect. That's the date that will show, on your suppliers, on your inventory movement rather, And also, when you are generating your supplier statement, the date will equally reflect that on this date, supplier's credit was actually raised, right? And you can always do that, select that here, and I would want to do save and close, right? And that is how that works there. Okay, so now we've done that part. Another typical scenario that could play out, when we are dealing with vendors, is what? Payments. Now, there are instances where we need to make payments. How do we go about this? Right? Now, when you make payments to your vendors, how do you go about this? Right? And when we look through our set of activities here that we have in our training outline, so we have instances where we paid our vendors. So how do we make provision for that? We've bought from our vendors. It is expected that they will be settled. Some of them might now be settled partially, and some of them might be settled fully. It happens in business world. And when such happens, when you pay your vendor, in physical, in your reality, you have to go into the system and also do what we call vendor payment, right? It is important you go into your system and do vendor payment. And in just like like we've said, you can always come here, click on new, right? Then you click on, of course, pay bills. Okay, so just to be sure we are still together. Okay, you can still confirm if you can still hear me clearly, and if we are actually on a good note, with respect to the training. Okay, so it still promises to be much more entertaining and exciting, right? So you can always confirm if you can hear me clearly, so that just to be sure we all are on the same page, right? Okay, all right. Thank you for that favor. Uh, thank you. Okay, so I will just post it here. So now we have some set of vendors to pay and their date of payment. So what do? We go back into our system, right? And we can actually select. You can see pay bills, right? Pay bills. So which set of vendor do we want to pay, right? Now, the very first thing is payment accounts. Which of the banks or cash on hand ledger are we paying from, right? And like you have here, right? Some vendors were being paid from Zenith, some were paid for GT and from GT, and some were paid, via cash, right? So what I would do in that instance is to treat, this first to say, oh, a vendor, some sort of vendors were paid from Zenith, right? I would select Zenith, and the payment date is very, very important. What date were they paid? 12th of January, right? I will come back here, select January and make it 12th, right? I'll do that. So here, system now allows you, system list out, based on your bills that are outstanding here, which of them do you intend to settle? And here we intend to settle Greenwell, right? I can come here, select Greenwell, and I would impute the amount, we are paying, right? So how much did we pay Greenwell? We paid 450. So I would come here, impute 450, right? Is there any other vendor that we paid from Zenith? Yes, there is. But note something. Don't be tempted to treat it on the same page here. Why are we saying that? That it would have been easy for us to say, oh, we are paying, since we are paying from Zenith Bank and we selected Zenith Bank as our payment account here, we just want to treat that of DIAC Finance Limited. But we won't do that, right? Why? The main reason why we won't do that is because, remember, look at here, what we have here. We have a payment date. And remember, I said dates are always important when working with accounting system. If you are not sure about your date, always ask or seek, your records to know, right? So now the payment date is 1st of December 2022. Yeah. Sorry, 12th of January, right, 2022. But the question is these two transactions occur? Did they occur, on the same date? They did not, right? So that is why we won't do the two, on this same page. So because they are actually, on different dates, they are expected to be treated differently. Remember, we could save and send, save and print, save and close, and all, right? So this will form our payment voucher. So if I click on save and print, we would see how, the payment voucher would look like, right? And you will see, it will show you the vendor, the invoice amount that was paid, and all, right? So uh for the purpose of the class, what we've done is we've processed, that payment, that bill payment, right? And remember, it's what we've done is a partial payment for that vendor, right? So now let's treat the other vendor, which is paid from, of course, Zenith Bank, right? So we could just come here again. We are trying to do another, transaction. You can see the reference number is 2, right? So we want to select Zenith, payment date 8th of January. Select January here, make it 8, and amount 100,000 naira. So which of the vendor are we paying DIC Finance? I would select here. Yes, 100,000. Impute, 100,000. Haven't done that. What I would do is to equally what? Save. I would do save and new, right? I want to do save and new. Save this. Then let's tweet Panocean. We paid Panocean from our GTB 200,000. Okay, GTB on what date? 1901. Okay, so 1901. So 19 2022. So to confirm that, yes, 1901. Okay, so here Panocean. Select Panocean. So how much? 200,000. 200,000 is the amount being paid. Okay, so when we do this, I want to equally save this and tweet Wadoye Nigeria Limited being the last. Okay. So Wadoye Nigeria Limited is being paid from where? 25th. It's being paid from cash in hand, right? 25th of January. Okay. So Wadoye. Okay. Okay. So one moment. There's no outright bill here, so we could actually do that from our banking module, right? Okay, so do we have Wadoye created as a vendor? Let's see. Okay, so we could write a check, select a bank. So Wadoye, now we are paying Wadoye because there's no open bill there, right? So Wadoye Nigeria Limited, from which bank is being paid from cash in hand, payment dates 25th of January. So just make this 25, just to be sure. Okay, yes. So category. So we are only paying for Wadoye here and impute the amount, right? And once you do that, you can always save and close. And of course, that's okay. And select, do the needful, impute the amount here, 100,000, and click on save and close. Then that is how you treat such. Another way you can go about it is to equally go from your banking module. So you can equally do the transaction also from your banking module, right? Right. All you just need to do is go to banking and have your banking module configured. Okay. So now those are some set of transactions you can actually do when it comes to your vendor, right? Now credit card credit, that is if you have your credit cards synchronized with the application, right? But you have instances where most of these integrations works with uh legislations outside Nigeria. If you are using QuickBooks Online in the US, it's very, very easy to integrate, your QuickBooks Online with your banking application, and you can always integrate your card and all that with it. You can even, make initiate payments from your QuickBooks Online app, and the likes, right? So that is how, and you can equally attach expense, to your suppliers. But when you attach expense to your supplier, they don't, affect your supplier's information directly, right? It's only being affected between the payment platform, which could be any of your bank, right, and the expense that is being incurred, right? So that is how that equally works. Okay. So those are scenarios that could play out when you are doing suppliers related transactions, right? And that is what we just looked at, right? So now we have quantities on hand now, and we've been able to process some returns, we've been able to process some payments, right? Now, those quantities we have on hand, the best thing that could happen to them is we selling them to our customers. And this is where your sales flow process, how you can tilt it on QuickBooks Online, and this is where they become applicable, right? So we'll be moving very fast, real fast, because of time, right? So but now with respect to our customers, remember I said when you want to do customers related transactions, you can go through your sales. Yeah, you can go to your sales and click on customers. And on these notes, you can actually go to individual customers and say that, okay, if I want to raise a customer invoice for Bakers Nigeria Limited, or I want to raise what we call an estimate, for my options here, which is called action, I can actually do quite a number of activities. You can even make the customer inactive. There are instances where, let's say, in error, we've created couple of duplicate customer informations, right? And we now realize that, oh, we have Aziz created as a customer. We named one Aziz Limited, we named the other Aziz Nigeria Limited. Oh, these are two records already, right? You can actually make one of them inactive, because the system will not allow you delete any record that has any activity in it. That is how QuickBooks Online works, right? It doesn't matter if the balance in that customer account is zero, right? What the system considers is, does this customer have, any amount, any activity with respect to, be it could be invoices, it could be estimates. If they have, the best you could do is to make, such customer inactive. QuickBooks, Online does not allow you delete any master file record, customer inventory, suppliers, or ledger account if it has any activity, any transactional activity in it, right? So I haven't said that, and I stated that if you want to do transactions, you could either go to individual customer here, locate your customer and click on the option below, right? Or you could go to your new, right? I prefer going to new. From new you can now choose any off this transaction that you want to do. But remember, I want to start from estimates. Estimate, when it comes to suppliers, we have what we call purchase orders, right? But when it comes to we dealing with our customers, what we have majorly is what we call quotations. You could call it sales order, right? You could call it estimates, like QuickBooks Online is having its own here, right? And what do they do, right? what it does is, we could have instances where our customers could reach out to us to say, oh, do you have this set of items, or we want to buy this set of items from you. Can you give us, what their cost is looking like, what our cost would look like? And what do? We go into the system to raise what we call estimates, right? And when we raise such estimates, we can then send the estimates, to our customers. But note, when we send estimates, it doesn't affect anything on QuickBooks Online. It doesn't have any accounting implication. It doesn't have any finish, right? So it's as good as you equally, it's like a purchase order, but it's the reverse case now, because you are not sending it to your vendor, rather you are sending it to your customers. So when your customers now look at your estimates, right, when they look at it and they are okay with it, right, it is until then that your customer can then send you their own, what they call, purchase order. Do you understand? Now, it is until when you send them that estimate, they could now look at it and say, oh, we've agreed on the amount we want to, on the quantity we want to buy, and the amount we want it, bought for, right? They could now send you their own purchase order to say, okay, supply us this. So when you now receive their purchase order, you can look at it. You can, based on that, you can either send them a pro forma invoice, or wait till you deliver, right, those set of activities, those set of product or service. It is until then that you yourself will then convert the estimate you've created into a customer invoice and send to them. You can see the relationship between you creating an estimate, right, send it to your customer. Your customer will look at it. If they are okay, they could now send a purchase order that will be in their own name as an instructional document to you, right? So when they send you that purchase order, you could now work on honoring the purchase order. When you honor the purchase order, what do you raise? You raise what we call a customer invoice. So that is how the flow works, right? But to just take us one step back, let's now raise what we call estimates. Let's raise one estimate, then we'll raise two others to be customers' invoices. So what are those sales that we made, during this period, right? You would see here that we have a section for invoices and receipts that were sent to customers, right? Invoices and receipts that were sent to customers. So now, on item 1, we have 3rd of January, and that is to West Atlantic. So I'll select West Atlantic here as my customer, right? Then, of course, estimate date. As at what date am I sending this? 3rd of January. So I will do 1/03, 2022, right? Expiration date. Is an estimate that is expected to be honored within a certain time, right? So we could we could set an expiration date for our estimate, which in another name could be called quotation, to say this quotation would only be applicable for the next 2 weeks. If you guys do not, send your interest in purchasing from us, then the quotation will be as good as it being expired. It simply means price could change at that point, right? So if you want to set that, you can select expiration date, right? So, but what we want to easily do is to just select the product or the set of services that we want to raise estimate for. So now we want to sell to them HP Light Book 5 units at 170K, right? So I would come here, type in Light Book, select here what quantity, 5 units, right? At what rate? At 170,000, right? So is there VAT on it? Yes, the item is vatable. I would select VAT 7.5. Remember the class, we talked about class. So this is HP, right? Class being a cost center. So it is not compulsory, right? But you can just make use of it. So then the information goes further to say, and they paid cash fully, right? 850K to Zenith Bank. Okay, so that is to be treated separately, right? There are two informations in one there, right? We have an estimate, or which is to be converted to an invoice later. Then we have a payment information, right? Those are two things. Remember, invoices are always different from payments. Payment receipts are different from invoices. Invoices right, would always affect your customers and the item. And your customers could choose to pay in that instance, or they could choose to pay later. The moment at which they now pay, you now raise, a payment receipt to them, right? But when you see informations like this, remember there are two informations in one. You could go for an interview, or you could be engaged, right? And you could have such, outlined, right? So although QuickBooks Online has a facility that has been called sales receipt, and we'll look at how that works. But sales receipt would only work, for we'll look at that. There are instances where you make use of sales receipt, right? So, but this is, remember, this is an estimate. This is a quotation that we are raising, right? And when we do that, we do what we call, we can do a save and send, a save and new, a save and close, and we looked at, those parameter earlier. So here I just want to do a save and close, right? Because I want the system to have, that imputed, and so we want to move, from there. Okay, so what we've done is to raise, of course, an estimate, right? We've raised an estimate, and but estimate is not enough, right? Estimate is not enough. From this estimate, we are assuming again that we've actually finalized this transaction. So this transaction, they've sent us a purchase order, and in some cases, they've told us, oh, you can supply. So what do, right? We can now go ahead to raise a customer invoice, right? You can see how it works, right? And in some instances, some business activities does not involve you raising an estimate. If you have some sort of working customers and the likes, you don't have that time to be raising estimates. What do? You go ahead and raise customers' invoices directly. And to raise customers' invoices, like I said, can easily go from your new section here, select invoice, right? Or, on this screen, on this customer screen, from this sales module, you can easily go to your certain customer if you have that customer added already. Or if you have any estimate that has been raised before, you can just go to all sales, right? And you can easily filter by your estimates to say, I only want to see estimates here, right? This sales portion of this screen is what gives you all your relevant information, or relevant transactions rather, that you've raised with respect to your customers, right? So here, what we want to do is to convert, you know, a customer's estimate, right? And I will come here from the action, right? And we want to do convert to invoice, right? We want to convert it to an invoice. So I would come here, say convert to invoice, and the system would open up, an invoicing screen for me, right? The system would open up an invoicing screen, the same customer, what is now the invoice date? The invoice date matters, right? We could send an estimate on the 3rd of January, right? And it could be that it is until February. It was until February that we delivered. What would be on your invoice date? Normally, it is expected that it is when you delivered, it is until then that your customers are indebted to you. So it is the date you are raising that invoice, because invoice is a document of sale. The only document that you raise when you make any sale, or for you to be able to recognize any revenue, is what we call customer's invoice. No invoice, no revenue, right? When you want to generate or recognize revenue, the source document that you raise, is mainly called an invoice. Then, of course, in some systems, you have your debit notes, unless you equally do what we call journals, unless, but no, accounting software wise is the primary source documents that you raise in recognizing revenue is your customer's invoice. So now we are converting this to invoice, and as at what date? What date is the invoice being raised? Right? It is the date the sale actually happened. We could make a sale. Now we made a sale in January, but because we are just making use of QuickBooks, I'm taking this as we posting backlogs, right? We are in December. We won't say because it's today that I'm raising the document should carry, 11th of December. No, it is actually the date of the invoice, the date we actualize that sale. Have that noted, and that needs to be checked and confirmed to be correct, right? So I will select that. And when is my due date for this invoice to be settled? When is, the due date I have on it, right? Remember, it's 30 days interval, and that is why the system is considering second, of February, right? And if it changes, if I want to change, I can actually improve on it and select the appropriate date here. Okay, that's the invoice amount. Then I have here my set of items. So for my estimate, we estimated for 5. Did we still provide, all the 5, or did we make a partial delivery of 3? So if we make a partial delivery of 3, what do? We edit this quantity and now impute the adequate quantity that actually amounted to sales. So if we made a partial delivery of 3 or partial sale of 3, we impute 3. What happens is that the estimate will still be carrying an outstanding of 2, and any day we honor the remainder, we can then come back and now invoice them on the remainder. That is how it works. But in this case, we are invoicing the whole of 5, so I would impute 5 here, right? And of course, at what rate? As the rate changed from the last time we generated, an estimate. If it had changed, we would impute the correct rate here. But we want to assume it has not changed, so we'll flow with it, right? Then what do? Here we are okay. Do we want to include any message, any attached message that we want? Maybe item received in good quantity and not to be returned and all that, or we don't do refund and all. You can always spell it out and have it imputed here, right? Do we have any discount? Do we have any discount in terms of value or percentage? If you do discount in your firm on this sale, you can actually impute your discount here. And your discount could be in monetary value, could be in a percentage, or they could be in amount. If I enter amount here 10%, the system does a 10% on this amount and amount into the final figure. But if my discount is saying, oh, is 850, but we'll give you a discount of 50,000, I can impute the value as a discount. So QuickBooks Online has element of those two, right? So, but for the purpose of this exercise, I am not making use of any discount, right? So what do I want to do? I want to click on save, right? And new, because I want to do, couple of other invoices, right? So there I've been able to raise that invoice. And by me raising the invoice, 2 things had happened, right? And what are those 2 things that had happened? Now my customer is indebted to me. The system would easily show that customers are owing, and the system would have reduced the quantity of inventory items that I have. If the items being affected here, right, if they are physical in nature, their quantity would have reduced because what? I have raised a customer's invoice. That is another beautiful thing that needs to be noted in that instance. So please, I want you to confirm that we are together, that we're on the same page, and you can hear me and see my screen clearly. So please, as a form of confirmation, I want you to drop a chat if you can still hear me clearly so that I can proceed, right? So please, you can drop a chat to be sure that you can hear me, right? While we proceed to raise, a couple of other documents, right? Okay. So I want to proceed to the next, line item here. All right. Thank you, Collins. Thank you, Godwin. Thank you for that. Okay. So now the next line item here is still on invoice, right? And now we want to invoice, we want to invoice Progress Limited because we sold them to them, some set of Seagate, hard drive, 7 units at 30,000 naira, per unit. So I would proceed back to my screen here, select, Progress Limited, right? And remember, beautifully, QuickBooks Online allows you, when you raise that invoice, you could send and share with them, right? So let's not forget that. Okay, so here, what is my invoice date? I explained this architecture before, so I will just select this to be 4th, of January. I will select this to be 4th of January 2022. Okay, my due date is still 30 days. Okay, my invoice number is still there. Then what are the quantities? Seagate. What are the items? Seagate. right? And remember, in this instance, it could either be item, it could be product, or it could be service, right? If what we are invoicing them is on service, what do? We select our service item. If you don't have any, what you would do is to go and create the service. Because it is important that you need to create your set of your set of service and product that you deal with in the items module, like we did yesterday, right? So now, how many quantity of these are we, going for? 7. We sold 7. At what amount? At 30,000 naira. So I would impute 30,000 naira here. Still recognize VAT on it, right? And my class, of course. This is Seagate. Let me purposely, raise Seagate as a brand. Let me create it as a call center. We will see this, when we get to report aspect, we will see how beautiful, this translates to, right? So is there any other thing that has been sold to Progress Limited? No, right? So no, what we'll just do is to, okay. So what we'll do is to click on save, or we do save and new, right? So I want to click on save. Uh, so we will now to treating the third line item there, right? Okay, so now we are done with this save and close rather. So we are done with that. And if we still want to see the set of transactions that we've raised, remember, you see that from your all sales screen. So we can see everything here, and we can also choose to say, oh, we don't just want to see all our transactions here, we want to see only invoices alone. You can select your invoices, and the system will show you the set of invoices that you've raised, right? And I can easily say from here, if I want to raise a new set of invoice, I can choose, that here, right? This is just for me to know, to have a view of those past, transactions that I have raised. And I can also choose to reprint and do all sorts, on this screen. So, but for the next line item here, saying 15th of January 2022, that James Balori contracted us for laptop repairs, right? And laptop repairs were 80,000 naira, right? And they paid a cash of 80,000 naira as well. So remember, I said you could do an invoice, and we equally have what we call sales receipts. They work alike. The only difference between rating an invoice and doing a sales receipt is that, remember, invoice would only treat invoices, which affect your customers, and invoices affect, 4, or in some cases 5, ledger accounts. For some of us that do not know, let's have it noted now. When you raise invoices within the system, it affects 4, or in some cases 5, set of ledger accounts. And what are those ledger accounts, right? So the very first thing is when an invoice is being raised, right? Like what we did, the other time, your customer's account will be affected. It simply means your customer's account would increase because they are owing, right? And when your customer's account is affected, it all equally translates to what we call your revenue, right? Your revenue, your customers will be debited, which increases your customer's account, which increases your receivable. Then your revenue will be credited, as a ledger account, right? Then if you had built, charged VAT, on that transaction, you realize that VAT would equally be credited. Remember, your customer is paying for your element of revenue and also the VAT on it. That will be debited. Then your revenue, right, and your VAT would be credited accordingly. Do you understand? Now, the remaining set of ledgers is if you are dealing with inventory items that are physical, right? Remember, when you make a sale, your item would reduce, from your system, of course, or from your warehouse, as you might want to put it. And when it reduces, right, it has a buyer affecting account. That value, the quantity that translated to that, the value of the item that you have sold that had reduced, would be debited to your cost of sales. So you have your inventory will be credited and your cost of sales will be debited. So that on that transaction, your system would have treated the revenue, which is your selling price, right? And also the value, the cost of that item that you sold. So now the ledger account in this case, would be receivable, which is your customer, right? Revenue, right? VAT, in cases where VAT is being, charged. Then of course, inventory and cost of sales. So those are the, five, ledger accounts that are being affected. You could be asked out there that when you raise invoices on the system, what happens? It's not enough for you to just tell me, if you are using an accounting system, for you to just tell me to say that, oh, it will only affect my customers and my revenue. No, not just that. The system equally treats the aspect of your inventory account will be reduced, and that would amount to your cost of sales being debited. I hope we got that part clearly, right? So that is how your typical invoice works. But sales receipt, we'll do two things together. We'll treat sales receipt to treat that aspect of your invoice and that aspect of your payment, right? That is what sales receipt does. And sales receipt is actually good for those, set of customers that are working customers, that are cash customers. So if you have an eatery, for instance, or you have a store where you have customers and they just working, so you don't want to be doing invoices, they are not credit customers, right? So what you can actually make use of, you can make use of sales receipts. So that is why for the other, item here, right, which is James Balori, they came for laptop repairs and they paid 80,000. So I don't want to do invoice and come back to do receipt. What do I want to do? I want to make use of sales receipt so that it can help me integrating the two, at once. Now I would select James Balori here. Remember, this screen is sales receipt, not just an invoice. So I will select James Balori here. Okay. So James Balori is not yet created, right? So what I would easily do, I can easily create James Balori to say, okay, this is James Balori. So if I want to keep some other information here, I can go to details, right, and add a couple of other informations with respect to James Balori. Okay, so I will do that here, James Balori. So I want to keep information as to his address, his name and every other thing. If I want to impute his email address, so as to allow me send this to him via email directly, I can just do that, right? I will click on that and click on save. So I've created James Balodi, right? Now, sales receipt date. What date did that transaction occur? 15th of January. So I'll select January 15th, right? This is my sales receipt number. Location, let me purposely make this Lagos, right? So now, payment method. Now, remember, we said sales receipt is treating two things at once. So they are buying. We are raising invoice and we are equally, recognizing their receipt. So which platform? He paid via cash. Reference. I could just input the reference number. Where was that money being paid into? Let's say we received it into cash now, right? So remember, when we were treating invoice, we didn't treat payment method, reference number, and deposit too, right? But sales receipt allows us to do that. And what is it that we rendered, for Balori? So repairs. I want to search for repairs, laptop repairs. I'll select that. So, and I can further be detailed in my laptop repairs, for a computer, maybe HP system and all that. You can be that extensive. Quantity year one. So what rate? We only charge them 80,000, right? And was there VAT on it? I could say no. Do you understand? Let's look at instance where we didn't charge VAT now. So no VAT, right? But what class? Now this this does not necessarily have a class, but let me just call it repairs, right? And click on save. Okay. So I haven't done that. So what do we want to do? Do we want to include additional information? Do we want to attach any attachment and all? Is there a discount on this? No. You can see the total of the invoice is 80,000, right? And the amount being paid, is equally 80,000. Is there any balance coming from, this transaction? No. Do you understand? If it's a partial payment, you could easily, if it's a partial payment, right, you won't make use of this as screen, right? You won't. So this one is emphasizing, saying that we render this service and they paid immediately. Okay, so I haven't done this. What we'll do is we want to easily do a save and close. But I hope we got that part. The difference between sales receipt and an invoice, right? So now to just highlight this part out, just to note that we've treated this completely. Then lastly, we have okay, lastly here, it's a payment. So that is, we've been able to raise our invoices, be it a sales receipt, right, and a typical invoice, right? So what other transaction do we have with respect to customer, and in what would they transform to, right? In what instance, right, do we raise other source documents that we have here? So we looked at estimate, we looked at invoice, right, extensively. So let me see. Okay, good. We are good to go. Thank you. Okay. So now we want to move into, another set of transaction, right? Another set of scenario that could play out. And what is that? Right? That is what we call credit notes. Credit notes, is actually, a functionality within QuickBooks Online also. And what instances do you raise a credit note? When you raise a credit note, what happens majorly? Right? So credit note is to be raised in two instances. Credit note would only be applicable in two instances. What are those instances? Number one instance that would amount to you raising a credit note is if, from a couple of those invoices that we've raised, if those laptops that we've sold, let's say one couple of customers, returned some items. If they should return some items to us and we've received them physically, what do we do? What we do in the system is to raise what we call a credit note. A credit note in that instance, would reduce the customer's balance that is to pay us, and would equally bring into our warehouse, right, the item, right? So our customers' balance would reduce, our inventory would increase. At the same time, the earlier recognized revenue would equally be reversed, right, for that quantity of item that was returned. So when a customer should return, if a customer should return some set of items to you, what you raise in the system is a credit note to recognize that. That is first instance that you do that, right? The other instance that you could raise a credit note is when you don't have that facility, or that you are not given that right within your organization to edit an earlier posted invoice. What do? You raise a credit note, to reverse an invoice. So you could raise credit notes, could be raised as, to recognize customers' returns. Credit notes could equally be raised to correct, as a reversal document to invoices that were earlier raised. Right? Those are two instances where credit notes will be applicable, in you raising in the system. Right? And of course, just like I've mentioned, if you are totally reversing, an invoice, what you do is when you select the customer, the system will pop up the invoice there, and you can easily link the invoice, to the credit note you are raising, right? And you can do a outright reversal. But when you are reversing outrightly, you will need to ensure that you maintain the same information you have on the invoice, ranging from the customer, to the date that you selected. If you are reversing the invoice due to a wrong date, when you are raising this credit note, let it reflect the same date the invoice is having, right? Everything needs to be the same thing if what you are doing is a total and outright reversal. But if what you are recognizing is a return from a customer, what do? You link, to that invoice, right? You need to select the exact date that those set of items were returned. They could return it in a month's time, in a week's time, right? And select the appropriate date. And when you do that, right, what quantity? Don't just go and just save and you think you've done the right thing. When it's a return, what you need to be wary of, what quantity was returned, what quantity did we exactly return, right? And you impute the quantity here. Remember, on our invoice we sold 7. If they return 2, we impute 2, at the exact rate, right? And when we are done with this, before you finalize, go through your information again, ensure you are selecting the right customer, ensure you are selecting the right date. And when you are done, what do? You save, and you are done, with the transaction, right? That is how you raise a credit note, right? And we've looked at instances that would warrant you raising a credit note, right? So please have that noted, and always remember that dates are important. My dates here that I'll be selecting here if I'm to raise this credit note is not saying because it's today that I'm raising it using my system. It is the date at which that occurrence actually happened, right? If I raise an invoice for last month and I want to reverse it, right? It is expected that I should select my date for that last month, the same date that that invoice has, right? The only reason why I might not select that exact date is if we've closed our book for last month and we now agreed internally that okay, we could consider the reversal this month. Do you understand? So you need to be dynamic when you are working with accounting systems. Your thinking has to be very, very open. You need to know the scenarios that would come to play, right? You might have a one-way approach to it in your firm today, right? But you need to be very, very dynamic, right? And that is how it works. And that is what makes you top your game when you are using an accounting software. So please, that is also what we do, right? If you have an accounting software that you are working with today and you are not really getting the best from it could be QuickBooks, it could be Sage, right? It could be Zoho, right? It could be a couple of other systems, Microsoft Navision, and you're having challenges and it's not reporting well or anything. That is what we do. We could come in, review your system, look at what you need to do better, area of enhancements, and also to ensure that you make good use of your system and it gives you optimally what you need to get from it, right? And we've had instances where clients will be using the software, they are not getting the best from it. They don't even know that there are possibilities of them getting more than what they are doing. Or it could even be that whosoever that must have configured the system at first for them have not factored in one or two things, and that could lead to your under usage of such application. So if you are in such instance, you can always, please feel free to reach out to us. That is what we do, and you'll be rest assured that we would always give you the best in terms of services. Okay, so now coming back to our training, right? That is what a credit note will do, right? But in this instance, I don't intend to raise any credit note, right? But you just need to note that that is how it works, right? And a credit note will do total reversal, of course, of what your entries were when you raised an invoice. Remember when we did an invoice, we talked about the set of ledger account that it will affect, right? So the same thing happens when it comes to credit notes. It's just that on invoices, your receivable is being debited, revenue credited, then VAT element also is equally credited, right? Inventory, is credited with respect to the cost now, and your cost of sales is debited. So the other way around is what happens when you raise a credit note, right? So thank you. That is what credit note does. So I want to leave without saving purposely because of time, right? And that is how that works, right? So before we go on a short break, right, let's treat the aspect of payment. Let's treat the aspect of payment. Then we'll now go on our short break. So sorry, I know we must have normally by my time it would have been 2 o'clock, but let's just raise a couple of payments, then we'll just go on a very short break, right? Okay, so to move very, very fast, to raise payment, remember, we can do that in 2 ways too. Can either go from your sales, then you go to all sales, right? And if you know the particular invoice that payment is meant for, right? If you know a particular payment, uh, if you know a particular invoice, specific invoice that payment that you want to raise is meant for, you can go to that invoice, right? Go to that invoice, and from the option towards the right, just like you have here, you see receive payment, and it is best to do that, right? It is best to do that. And if you don't want to go through this route, you could either go to the specific customer, go to the customer from the list of options. You can say you can say you want to get payment, or you go from new here, right? And you have on the new screen, you have receive payment. So these are ways that you can actually work with your accounting system. So for these payments, remember, we have some couple of payments that we've not reached, right? We said West Atlantic, remember they paid an amount of 850,000 to Zenith Bank, right? So how do we go about that? Right? You need to recognize your payment when payment is being made, right? So to go about that, come here. Remember, I said you could go to the invoice directly to pick up the invoice and do a payment. And that, it's always best when you associate receipts, to invoices. It's always best. So it's at a glance, you can easily see the set of invoices that are outstanding, right? And the set of invoices that have been settled from your customers. And it helps you, as a business person and equally as an accountant to fish out, those invoices that are outstanding, and those ones, so that you can know the invoice number to be, to actually go after in terms of, settlement. So now, this West Atlantic, I'll be raising the first payment on West Atlantic, right? And you will see here, I have outstanding transactions. So payment method, what date did they actually pay? So West Atlantic paid on the same date, which is 3rd of January. Right? So I will come here, to select 3rd of January 2022. And when I do that, what is the payment method? Did they pay via check, via cash, via credit card, and all? Do they pay via direct debit? Or you can create a new payment method as you may deem fit. I can say they pay via EFT, electronic fund transfer. Select that, reference number. I could just impute a reference number here, right? What, what platform did they pay to? Is it did they pay to our GT Bank account? Do they pay to our cash, on NAN, which is to be debit, which is to be, banked in the bank later on, right? But which of our platform, our routine, did they make, this payment to, right? So deposit to, here they said they paid 850 to Zenith Bank. So we select Zenith Bank here. How much did they pay? Right? They paid 850. Right? Now, the system has, you can actually select also, can link the invoice that amount was for here. So if I select here, you can say I've unselected it, but if I select here, I would have list of outstanding invoices anyways. So I can now say that this amount is on this invoice. So if you know the exact invoice that amount is for, so it's always good you link it here. You recognize the relationship, right? But if you don't, let's say as at the time you are making that payment, you are not sure, you can leave it out. But it's always good, right? You do that. So 800, how much from this amount, from this 850, how much are we allocating to this invoice? So if the invoice amount, if this amount is on the entire invoice, we will just specify that is 850 here, right? Because we have instances where a payment could be meant for 2 or more invoices. So if it's that, you can actually, the invoice will be listed out here, and you would actually now rationale the amounts with respect to all of the invoices. So when you do that, right, and you are done, you click on save, of course, you click on save and close, right? Or in my own case, I want to click on save and new because I still want to do a couple of other payments, right? So the next payment I want to do here is Progress Limited. Then, yes, Progress Limited actually made 2 payments during the period, right? They made the payment on the 4th of January, right? And you see that on the 20th of January, they made another payment. So let's treat them. Now, fantastically, right? They made 2 payments. So now we are selecting Progress Limited. Yeah. Okay. So we select Progress Limited. What method? They paid through electronic fund transfer also. Let me say this is your F04, right? They paid, Progress Limited paid uh, into uh, Zenith Bank. They paid 210,000, right, into Zenith Bank. So I'll select Zenith PLC. How much amount received? 210, sorry. 210, of course. So I'll mark this invoice as well. So the whole of 210 is on this amount. Then what do? I will click on save and new. Why? Why am I not treating the 2 payments, on the same so this is 4th of January. So why am I not treating the 2 payments, on the same screen? I'm sure you have the answers already. That is because they actually happened, on a separate date, right? This is 20th, right? And so even though they made the payment into the same bank, but they made the payment on a separate day. So don't just lump up that money, unless if the level of volume of transaction you deal with is that voluminous and all. But don't lump up that money, because why? When you generate their customer statement, even you yourself need to be able you need to say that, okay, this amount was the exact amount that was paid on this date. And on the 20th, that was when you now paid it. So, but if you lump up that amount, right, it doesn't speak well. That is not an appropriate way, right, of keeping accounting information. Right, you separate them. You know, let's as at the time they are making that payment, that is when you are posting, and it is the date that you received, right, that money into your respective banks, right. That is the date you would actually be using, right, as their date of payment, because anything you are posting would always have a reference, right. And you want to your reference in this case to any amount they paid, would actually be to your bank, and it is the date I am seeing in my bank, or I've gotten the alert. That is the date I will be imputing, so that my bank statement would always be in line with what I have in my software. So I haven't done that. So what do we do next? So what we'll do next is to save and new. Okay, the date is now correct. So we want to click on save and new. So we want to do the last, we've treated James Balori by raising sales receipt, remember? So we want to do the last part, which is paying, 560,000, right? The same Progress Limited. Okay, so Progress Limited on what date? 20th of January. So I'll select January 20th. What payment method? So I'm only doing an hot tab, flipping my screen because of time, right? So 005. So they paid, to Zenith Bank. Fantastic. Okay, they paid to Zenith Bank, so this will remain Zenith Bank, and they paid how much? 560,000. Okay, 560,000. Then the 560,000, they still have some invoice outstanding. So I can just say the balance on this, I can just use 15,750 out of that money to balance up, this invoice that is still outstanding. And what do I do on this note? I will click on, I don't want to do save and new any longer, because that's the last transaction with respect to that category. So I will click on save and close, right? So, and see, it's now making more sense, right? It is important for us to know, that an estimate, which is also called sales order or quotation in some other software, right, could easily be converted or could easily translate, to a customer invoice. But when you send an estimate to your customers, remember, you know, that document is not necessarily, a transactional document. It's a customer invoice that depicts that, your customers are now being indebted to you. right? So you can see those instances. But when you raise an estimate or you are only pre-informing them that this is the amount or this is what we intend to do for you and this is the amount we'll be doing it. Right? It is only a customer invoice that would show that they are indebted, and that is how accounting systems also work. Right? So when you say, "Oh, I raised the quotation now," but I raised that document and I didn't see the revenue. No, you are not seeing the revenue because you've not raised the right document, right? And some organizations does not bother themselves about raising an estimate before converting to invoice. They just go ahead to raise customer invoice. But when you raise customer invoices, make sure you know the implication of that, right? So we looked at estimates, we looked at sales receipts, we looked at credit notes, right? We looked at received payments, which we did just now, right? Then we equally have what we call refund credit. Sorry, refund receipt. We won't be taking much of our time on that. So refund receipt is just saying anytime you refund let's say you make do of money refunds. Maybe if any customer should return anything, you refund the amount to them. So if you want to treat such, you can always make use of refund credit, right? So on these notes, right, I would want us to go on a short break. If you have any questions for me, please drop them, right? Drop them, and uh, I'll be answering them. Okay. Oh, so sorry about that. Yeah, so sorry about that. Okay, so yes, you said you missed the second is when one needs to raise a credit note. Okay, so let me just repeat that again. Credit notes are to be raised in two instances. The very first instance is when a return is being made by your customers. When your customers should make returns of what it is that you sold to them, right? You raise a credit note. The second thing is always note that credit note is always a reversal document, to your customers' invoices. If you raise a customer invoice in error, right, be it by selecting a wrong customer, a wrong date, a wrong set of inventory items that you selected, and you want to reverse it. Remember, I said QuickBooks Online allows you to edit. You could go ahead and edit the invoice for you to show the right thing. When you edit the invoice, you don't need to raise a credit note, right? But you could be hacked, or you might not even have that access. You might not be given that access in your company. Or let's say you are working on another software. If you want to reverse an invoice, the source document you raise is called a credit note, right? So those are the two instances when a return is being made and when you need to reverse an invoice in all entirety, right? And I explained what you need to look out for. When you are reversing an invoice, you need to make sure your credit note information is the same information as to those set of informations you have on the invoice: the date, the customer, the product, and every other thing, and the amount, right? So the only thing is just that as this account, if as this the customer will be debited of a certain amount on a specific date, and when you are generating the statement, when you are checking on that same date, a credit note is reflecting, to nil out that invoice amount, right? Okay, so let's go on a short break. If you still have questions, please drop them. I will attend to them. No problem at all. And let's have a 10 minutes break, please. So when we come back, we'll look at journals, expenses, then we'll look at a couple of reports, that we can always generate, using the QuickBooks Online application, right? Okay, so let's go on a short break. Then we are to uh, join back in 10 minutes time. So by 2:40, right, we would be joining the class again, right? 2:40. Okay. All right. So please drop your questions if you have any. I will still be on standby to attend to them, right? So thank you so much, part of the class. Please feel free, drop your comments. You can equally, drop your feedback on the group chat, right? Because I know there are a couple of us also probably due to church activities or any other activities that they are not charged, just for them to know that we are really having the training, and the training is actually a nice one at that. And I'm sure we are able to note one or two things. Okay. All right.
Over to you.
Yes. Thank you so much, Olabi. Okay. So let's get right into the second half of the training. Okay. So please, like you said, someone suggested that the lines were breaking at some point. Well, we are so sorry for that. You know, that's just you know network challenge we never foresee coming. It's never been like that in our previous training. So, and just like we said, you wouldn't still miss anything because you will still be sharing us we still be sharing with us the video right for this session. Okay. So please confirm if I'm audible and if you can still see my screen. Just want to be sure we are together. Right. Please confirm if you can see my screen. So thank you for that confirmation. Okay. So we were looking at activities and also transactions, right? With respect to our customers, and we're able to look at how QuickBooks Online, treats this set of activities, and also what would actually warrant these activities. We looked at, raising estimates. We looked at invoice. We looked at what we call sales receipt, and we showed us and equally told us when it is most applicable, right? And we looked at receiving payment. We looked at credit notes, which we raised together, and we also told us what refund receipt is all about, right? Should you want to process a refund, a cash refund to your customers? So when a return of item is being made, right? Let's say we sold some set of items to our customer and they returned some quantity. So if we have a refund policy in place, the quantities they returned, uh, we are together. Okay. So now what I was trying to explain is this. I said the scenario that we make, we refund payment that was earlier paid, by our customers, right? Then what we do, at that point is to raise, what we call refund receipts, right? They are quite different. Credit notes comes to play when an item is involved, or do you understand? All right. And refund comes to play when item is being when cash, or when settlement is involved, settlement to your customers. is involved. Okay, so now let's now look at some set of activities that we could do with QuickBooks Online, and that will take us to the order section, right? Order section, right? Now before going to journal entry, rather, before going to journal entry, if we look back at our class exercise, we have a couple of activities here, which are expenses. How do we recognize expenses, within QuickBooks Online application? How do we recognize expenses, right? So let's look at that together. Remember that to do expenses, you either go through either of these screens, right? You either go through from the new, you see expense under the vendors, right? Under the vendors are, are part of the screen. You have expense, right? And you could equally go from the expenses module itself. We have expenses here. Then you click on expenses, right? So that those are the two ways you can go about this. Expenses could be in two forms. And I hope I'm audible. I hope you can hear me clearly. Just to be sure we are together. Please confirm if you can hear me clearly, right? If not, I might need to change my network. But sorry, just please confirm you can hear me clearly. Okay. Okay. So now we were talking about expenses, right? And we said audio is breaking. Okay. So can you? Okay. Let me just change my network. So just uh spare me a minute. Spare me a minute. Okay.
Yeah, sorry for the break. Our facilitator is having some challenge with his network. I guess he's back now. He should be joining us anytime soon.
Okay. So sorry about that. I actually, worked on changing my network, right? Okay. So now let's just get right back into it. Then I want to believe the network should be much better now. Okay. So sorry about the short delay, right? So what we were trying to do before is to try to raise, expense, right? And of course, in raising expenses, I explained that you can do it in two forms. Is either you go to expenses and you select expense, or you click on new, right here. As you are aware that when you want to do a new transaction, is always, the easiest way to go about it is to click on new here, right? Okay, so click on expense, then the expense screen comes up, right? And here, so the way it works is this: we can actually choose, right? We can actually choose a payee. Payee does not, remember, the payee in this instance is who are we paying that expenses we incurred, right? In whose name are we making that payment? In whose name are we making that payment, right? And it's actually, it's a voluntary, field there, right? So if the expense in question, is with respect to a supplier, but you should just understand the concept of payee. Payee in that name, in that regard, is, in who did the payment actually, go through, right? So it doesn't mean that when we select a supplier, that expense would affect the supplier's account. That's not what, that payee is saying. Or when we select customer, as you can see, there's room for customers too. That doesn't mean it's the customer that pay is affecting, right? That expense is affecting rather. Okay, so we select the payee. I could just select, as this Nigeria Limited. It still does not have. Remember that expenses could either be paid for outrightly on that spot, or you could incur an expense, but you've not paid for it. Meanwhile, that expense could equally be classified as a liability. QuickBooks Online recognizes, that effect, and that is why you see payment account. If you are paying from your bank or cash, right? What do? You select the applicable bank or cash ledger, right? But if it's that expense that you've incurred, you've not paid for it. It could be paid, for by a staff that you would later reimburse. Do you understand? We needed some fuel, right? And a staff had actually, paid for such expense. As at that point, our organization has incurred that expenses, right? But the expense in this case is sitting as a liability. And until it's been cleared off, right? That is when that liability, will be taken off from the system. So here, payment account, that is why you're having room to either select a liability account, right, or a bank or cash that expense is being paid for, right? So either way, you select whichever that is applicable here, right? And you select your payment date, your payment method, your reference, your location, as the case may be, right? Then you now select the line item at which that payment, you or that expense is actually, meant for, right? So now, for the purpose of our exercise, right, let's go back to our class exercise, right, and let's consider some expenses. So here, 28th of January, right, salaries and wages of 90,000 was paid through GTB. How do we go about that, right? How do we go about that? So this is not going to a customer or supplier, right? We can deal with it. So from GTB, that's the payment account, right? But if it's that we only incur that expense and we've not paid for it, so it could actually go to accrued liabilities rather than GTB, right? So that is how that works, right? So here we want to select GTB. Okay, so payment date. What's the date of payment? 28th of January, right? We select the date. So payment method. Was it paid via cash or EFT or credit card? So let's say it's electronic fund transfer, right? And what was our reference? So this could be payment voucher 001, right? So location, right? Just select. Remember, we enabled this location, as a reporting, function, right? As a reporting function. So it could be used as location proper. It could be used as any other thing, right? Provided that we want to be able to track our profitability based on that. And another functionality is the class. And remember, we enable the class as well, as a cost center. Okay, so now this expense, right? So categories, we can now further say that this expense that we incurred through GTB for this day, right? We can then list them out here, right? So in this case, for that day, right, salaries and wages 90,000. So we'll come here, try selecting salaries. Let's see, do we have a ledger for salaries and wages? Okay, okay, we have wage expense. Let's see. Okay, we have wage expense. So we can, let's see, wage expense is an expense ledger. So let's select wage expense, right? Or we could either go and edit this salaries and wages expense account, right? And modify description. We could do that after this exercise here. So let's select wage expense, then appropriate description now. So salaries and wages, that's the expense ledger. So salaries and wages for let's say this is for January, right? Just have that stated. Then amount 90,000. On this expense, is there VAT on it? There comes, that is where our accounting knowledge now comes to play, right? So normally when we incur some expenses, we could have some set of bills. Our suppliers could invoice us. Our suppliers in this case, would likely not be our trade creditors, right? So our suppliers in this case could be our sundry creditors, and we explained yesterday the difference between being a trade creditor and, of course, having some set of vendors as what we call sundry, creditors. When they could issue us a set of invoice, let's say we used to have MTL, bill us, at the end of the month for our internet usage. Remember, internet usage is an expense to us, to Bill Gates, Nigeria Limited, right? But when MTN is giving us, their bill, right, they would always charge us VAT on it. That VAT is a VAT on expense, right? But we are not allowed, because of our own nature of business. We deal in buying and selling, of phones and other services that are related to phones, but not, internet services, right? So we are not expected to recognize VAT input, on such transaction. It's a mere expense to us, right? So it simply means the VAT that MTN is charging us, right, would expense them off together. Both the expense itself and the VAT element on it, both will be considered as expenses. It's the total as expenses. So our normal expense, VAT, that our vendor might be charging us on it, would not be recognized as VAT when using a software. Rather, would expense them all off, right? So that is why, let's say that this 90,000 naira here is VAT inclusive, right? So we only need to expense all those amounts. So our tax, column here has nothing to do with us at all. Do you understand? Right? It is only, VAT would only be recognized on activities that directly, that we do, raise invoices on. If if we what we do is we sell, internet, broadband, to customers, and MTN is the one supplying us that internet, and we are reselling, those internet. So the VAT on that, could be recognized as VAT input separately from, of course, from our cost as at that point. But in this instance, when we are dealing with expense, we need to ask ourselves, right? That if this is to be classified as an expense, it simply means we need to expense both the VAT element, and the typical invoice, and the typical, expense amount. Is if so, I want to be sure you understand that part. So that is why VAT here, when it comes to this expense, won't be treated, won't be considered at all. So the only thing that we need to consider here, right, is our class, which is our cost center. So here, salaries and wages does not, belong to Apple, HP, Repairs, Samsung, and Seagate, right? So we can create, a new, uh, cost center called admin or office. It could be any of, it could, as you so wish, right? You could have that. So I want to link it to admin. We will see when we go to report what this class as a cost center, what it helps us in doing, right? So I want to do that, admin. Then of course, if I have some set of expenses that have been incurred from GTB on the set date of 28th of January, then I can input such an expense as line 2. Do you understand? Or let's say, we have some bulk amount of money that we paid from a ledger. We paid those bulk amount of money from our cash account, right? Or a check, was raised. It could be a check of 100,000, for instance, was raised for from some level of expenses, or we withdrew, right, from GTB this, the amount of 100,000, and the amount in question, some chunk of it was for fueling, another chunk of it, was for stationaries and all. So we can actually outline the breakdown here, right, as a second line item. Then it goes on and on, right? So that is how this works. So on this note, I want to click on save, and new, because I want to raise some set of new expenses, right? So that's, you treat, expenses, right? Okay, so is the system is wanting me to select tax. So here I'll select no VAT, right? No VAT. So I'll click on save and new, right? So I've been able to raise that expenses, right? And it will be between my GT Bank, of course, and my expense ledger, which is wage expense. Remember. So now, if I want to treat another expense, which is, 22nd of January, electricity was paid in cash, for the month, right? So I can come here. Remember, if it's still, it has no payee, so it has no payee, at all. So I would only leave that out, right? And if I want to create, I could equally make provision for this payee as my employee, all right, to say that, okay, this money was actually incurred as an expense, but it was paid to Timileyin, or it was paid to Olabi as an employee. So we could tag them as payee anyway. The system allows us to add them as payee, So it doesn't mean that they are the ones, making use of that amount, but it's just saying that they are the medium, at which that money was paid out, right, from the firm's account. So here, my payment account, this is for this was paid via cash on the 22nd of January, right? 01/22/2022, right? My payment method is paid through cash, So this I could just make this, a reference number here, right? My location, okay, let me make this supposedly Lagos. My category, which is my GL account, also electricity. Do we have a ledger for electricity? Yes, we do. So we select that. Then of course you indicate, what the money was meant for. So proper and full description there, right? So amount is 40,000 naira. And remember, even if the electricity distribution company is charging us VAT, what do? We are expensing everything together. So here we select no VAT, then class admin, of course. So here what we do is save and new. We want to do the next one, which is maintenance of generator sets. So same 22nd, and that is paid, via Sterling. Select Sterling Bank. The 22nd, yes, the same date. Here we paid via transfer. Okay. So let me just switch the locations, right? So here we have repair and maintenance. Okay. So repair and maintenance, generator sets. Let it go to repair and maintenance purposely. So repair and maintenance of generator sets. Have this listed. What amount? 20,000, naira. Then of course no VAT, right? So the class here is equally admin as a call center, right? So in your case, your call center could be department, could be anything at all, right? So here, what I want to do, of course, is to click on save and new, right? So with that, I'm recognizing my expense, right? So save and new, then maintenance and general repairs. Also, 5,000 paid via cash on the 18th, right? So cash in hand, this would be 18th, right? Payment method, paid via cash. Okay. So yes, that's still Abuja. Let's just this is repair maintenance, so it said general repair and maintenance. So let me purposely, take this to repair and maintenance for motor vehicles, just purposely, so that we can have different, transactions reporting in different ledgers. Do you understand? So I just did that purposely. Okay, so copy this, paste here, and maintenance, general repairs. Let's assume the general repairs was on motor vehicle, right? So what amount? This is 5,000 naira. So no VAT, of course. So this is equally admin, you know. And remember, at the start of the class, we explained the difference between categories and items. So I want to click on save and new. Yes, on the 21st of January, we purchased, table for office use. So what do, right? Was paid via GTB, right? So here the classification here looks different, right? So here 21st of January, okay, we paid from where? We paid from electronic fund transfer, of course. Total amount of 50,000. Okay. So let's say that this location is Lagos. Let's just keep interchanging the location, right? So now the category here, now the classification here is quite different, right? This is unlike every other typical expense, because when expenses are being incurred, you need to ask yourself, do you want to capitalize this expense, or do you just want to expense it all out? Capitalization of expense simply means, rather than expensing that amount, you want to select, any of your non-current assets ledger, right? And your non-current assets in this case could be motor vehicle, right? It could be furniture and fittings, it could be computer equipment, any at all. It could even be intangible in nature, right? It could be that you paid for a certain software and you want to capitalize. You want to be able to amortize, that set of intangible assets for quite, a period. So you can equally do that. So the classification here, right, would not be an expense. Rather, it will be, a fixed asset, type. So here table should literally go to furniture and fittings as a ledger. But note here that we are yet to create that furniture and fittings as a ledger in our system. So what do, right? We either have any of these two options, right? We could go back to create that ledger, right? But for the purpose of this training, because of our time, right, I would want to take that, to this ledger account, called, wait a minute. Okay, this ledger account called property, plant, and equipment. Just permit me. Ordinarily, the right way to go about it is to go and create properly, right, a furniture and fittings cost account, right? That is the proper classification for that transaction, right? But let me take it to property, plant, and equipment as a ledger, right? Because of time, right? Okay, so I would impute here purchase of table for office use, right? So then what amount? 50,000 naira. No VAT, of course. So this has to do with admin as well. That's just that line item that we paid for via GTB on that day. So then lastly, we have electricity expense paid to Zenith Bank. Okay, so here I will click on save and new so that I will be able to do my last, expense here, which is being paid via Zenith Bank. So I'll come here, paid via Zenith, what date? 22nd, of January. Then electricity paid for the month, which is via Zenith Bank, 30,000. So let me just include any reference number here. Let me change this location this time around to Abuja. Now category. So electricity expense again. So electricity expense paid for the month, 30,000, right? But we'll purposely classify this to Abuja. So what amount is this? 30,000. Over, of course. So you can do an N that connects this to admin as well. So now it's getting more and more interesting. So we've been selecting class, we've been selecting locations. This is, we'll soon get to know why are we doing that. Remember, they don't come with QuickBooks Online by default. You have to be the one to enable them if you would want that feature, right? So here, I want to click on save, and close, because that brings me to, my expense, my postage of expenses using QuickBooks Online. Remember, expenses that are well posted, is as good as you classifying them properly, right? You need to go through your ledger chart of accounts. You need to ensure that you make provision for the right ledgers, right? We looked at creating chart of accounts yesterday, but you yourself need to ensure you make provision for the right ledgers. And that's what we've done is we've raised expenses, and on this screen you'll be able to see past expenses that you've raised. And you can always, when you're having a list screen like this, you can always filter, right? You can always filter to say, oh, what I want displayed. Let's say I want to edit any record, any transaction that are posted. I want to go into the system to confirm any of the transactions that are posted. And if you go to your list of purchase orders, your list of suppliers invoices, you have all the transactions you've done listed. So you can easily filter your screen to say, oh, I only want to filter by expenses alone. I want to filter by seeing my bills payment, right? And I want to, if I'm filtering by expenses, it should be between, this date and this date that I want to see. And I want to see, which of them, did I pay through a particular vendor, or a particular employee. You can always see them. And once you filter, the system would always show, the particular filter that you've applied. And the moment you come back to this screen, you need to do something, you realize that the system will still show, those set of filters, those set of data that you filtered. So what do you need to do to bring your screen back to normal? You need to clear that filter, right? How do you clear the filter? By coming here. So you need to click on clear filter. So the system will show all your informations well again, right? And if you want to edit a particular information, can actually go here, right, to either view or to edit. That is if you have the edit function. Because in your company, your admin could have limited those that have the ability to edit. Do you understand? So if you have the function, you can actually edit from this button here. If you want to reprint, you can actually reprint. If you want to void, void, delete and void, right? QuickBooks Online allows you to delete transactions also, right? But note, if you don't have the facility or the ability to delete because your rights might have been restricted, we normally advise users not to even delete, right? Unless in extreme cases, right? What would advise you to do if you know that you don't need a source document, or you raised it in error, or you just want to do away with it, can actually make use of the void. Void simply means you will still see that source document, but it's as good as useless. It doesn't have any accounting info. So it's as if you've shredded, that particular document. But you just want to still have a copy so that you can just make reference to it, right? You could do that. So that's the difference between delete and void. Delete would totally accounting system. But void, will still accounting, implication within your you would have seen the status would have been reading voided, right? So it's a useless document within the system as at that point. But couple of reasons could warrant you not to delete. Could be that, that document was actually approved internally before, right? And you don't just want to necessarily or actually delete them, right? So that is on that. That's what voiding, transactions entails. So if you have questions for me, please drop them. Then the next thing I want to show us on this screen is journal entry. Right? We look at journal entries, then we now migrate to reports. Right? So what we've been doing is just to look at typical, business scenarios that could play out. Right? And we just looked at expenses, classification of expense. You need to have created your set of ledgers in your chart of account. That is what will give room to you classifying your expense properly, right? And we looked at the payee function, right? And we looked at, a couple of things as to, payments through making use of dates and, line items that you can always select when you are, raising typical expenses. All right. So that's being said. Okay. Yes. So Collins just asked a question that are all the entries. So all the entries we've been entering is tied to the chart of our number. In fact, at the time of entering what we call categories, you realize we are selecting some ledger accounts. It is those ledger accounts that we've created. It's only those set of ledger accounts that we've created that we'll be able to select. That is one. And what we've posted, by the time we move to reports now, right? Do you want to leave without saving? Yes. So by the time we move to report, right? If you go to your chart of accounts, you would have seen there will be some set of balances, being displayed, on the face of the ledgers. You see QuickBooks balances. So let me reduce, some set of columns that I have available here. Let me remove bank balance. Let me remove tax rates, right? So yeah, in fact, let me remove that of detail type. So here I can choose to include columns that I want to see and columns that I do not want to. So let me remove detail type. So here you will see the QuickBooks balance column. And here you can see that for individual transactions that we've been entering, just for you to know that it's affecting, our ledgers, right? Look at inventory assets. It simply means our inventory value currently is 4.3 million, right? Look at our PPE that we raised. That purchase of table is reading 50,000. And if we want to see, this report, I can click on account history, right? And the system would be able to give you, right, the transaction that actually amounted to that value. So you would see, for PPE, property, plant and equipment ledger, you see that the expense that was raised, right, from GTB was purchase of table, right? And this is the value here, right? You see that it's an increase into the PPE ledger. The PPE was debited, the PPE ledger was debited, then expense, which is GTB rather, so the other leg, which is GTB rather, was actually credited, of that same 50,000. So the transactions we've been doing, apart from purchase orders and estimates, has actually been affecting our chart of account. That is why you need to structure your chart of account, well enough. Okay, so that is that. Yes, other expenses. Joy hacks that. How do we record bank charges? Yes. Okay. Yes. Under electronic, under DF. Okay, no problem. Under EFT rather. Yes, charges. All you need to do is to just create a ledger, an expense ledger for bank charges. Right? That is the only thing you need to do. And when you do that, you go to expense. Like we've been doing, you go to expense, then the category that you'll be selecting there, would be bank charges. So if I'm trying to record my bank charges from GTB, I'll select GTB here. Then the date, at which the bank charges was recognized, right? Let's say you work in a firm where you do accumulate all the bank charges at the end of the month and you post at once, right? You just need to select the end of the particular date, let's say 31st of January, right? And I want to select here, right? EFT electronic, the bank charges was through electronic fund transfer. Note that this payment method doesn't really affect anything. It doesn't really affect anything. It's just for your own internal usage to say, oh, this money that we paid, where did we pay it from? You could want to fall back to that to say, oh, this time we expense, did we? So, but you must have a ledger account, created for that purpose. So you can see there's a ledger account for bank charges. You have it selected, have proper description, input amount, then no VAT, then of course the class that is appropriate, right? And that is how you treat bank charges. Okay, so yes, that is for that, Joy. I really appreciate that question. And thanks to Collins too for that question. Okay, so that is what expense is all about. So let's look at journal entry. Then we just look at the reporting aspects and take our questions, hear our feedbacks, and of course, we look forward to you yourself going through, because we'll be sending you the video for the day two too. So we'll send you a detailed email that would encompass your certificate, your the day one training video, day two training video, the training materials with respect to the slides, right? And also, we shared with you the software manual before. We'll still be sending, it across to you as well, and as well as the class exercise. We want you to go through this video also at your own leisure. Watch them. I'm sure it must have amounted into additional knowledge on your part. Then practice, and let's engage even via our WhatsApp personal DM line, and you can equally drop it on the group chat. Let's look at we want to be there for you. We want to answer your questions. Entry, right? You click on journal entry, and the system opens up this screen for you. Yes, I'm sure you know instances when to raise journals. It could be, should you want to reverse, or you want to do some corrections, ledger to ledger corrections, right? Or you want to key in, end of the year audit adjustments. At the end of the year, when you do audit, some set of adjustment journals. So you need to go to your journal entry to raise them. But note that the journal entry we are looking at in this case is only ledger to ledger. We won't be considering control accounts. What are those control accounts? Your inventory, ledger account, your receivable, your payable ledger account are being tagged as your control account. So you are not expected to pass a direct journal entry into them. So if you want to do any adjustment with respect to them, you go through their individual customers and suppliers module, or you go through item, adjustment. If the adjustment they are giving you is in form of inventory also. Okay, so to raise a journal entry is pretty simple and straightforward. All you need to do is, what's the date that you are raising the journal? I want to select 31st of January 2022. What's the GL account? Right? What is the GL account at which you are raising the journal ledger account on the in this screen, right? Please avoid the temptation of doing that, right? So now to do our journal here, right? What we want to do is let's look at, okay, so just to be sure my network. Okay, so I'll be answering. Oladile is asking a question. I'll be answering that shortly. So now your journal here, and you could equally want to raise a journal entry to recognize your monthly depreciation. So let's do that. Let's raise a journal entry, or to reclassify. Let's say from our set of expense that we've raised, right? To say, okay, we have an expense on electricity expense. Let's say there's a certain amount of money, let's say 1,000 naira, that we classified wrongly, before. So we could want to credit, our we want to take that to generator expense. Let's say it's normally from the amount we initially posted into electricity expense, 1,000 out of that amount, is intended for generator expenses. That's what we are assuming here, right? So now that would form my debit entry, right? Still apportion this amount must tally, with your total credit, which is your 1,000. That is what, our journal, you know, he wants to care about here, right? And here, what we can do is to now click on save, right? But if we want to raise another journal, right, we could raise another journal, right? Provided it does not fall, within this date range, right? We could just click on save and new and raise another journal, right? But always note that your total debit and total credit must always tally. And if it's an all, so you would input all the total of your date, which will be the last date of your accounting period or your financial year, of course, right? Then you can then process, such, by doing save and new. right? Or save and close. So I want to do save and close, in this case, right? And with that, I've been able to raise a journal entry. Okay. Okay. So, oh, sorry about that, Collins. So I was only trying to, show us what and how to go about, a journal entry, right? But the only thing is that when raising a journal, you need to know your account to be credited and your account to be debited, right? And once you do that, once you know that, select your appropriate date, the date you would want, because the system would post, that journal for you. So select the adequate date you would want the system to consider, then select your relevant ledgers. So if I select Zenith, for instance, is do I want these accounts debited or credited? I would impute what is applicable, impute your description. In cases where you have relevant call centers, you can actually indicate it, and have several lines in your journals. So whichever way you want to have it, you just need to ensure that your total debit, equates your total credit. And when you are not sure of what to debit and what to credit when raising a journal, please reach out to an accountant or someone who has an accounting, knowledge, right? So that is what I was only trying to explain there. And if your journal is in form of an audit journal, of course, stipulate all your ledger entries and what is to be debited and credited, and process it by clicking on save. And that is how you do that. Okay. So yes, Oladile was asking, a process where there is fixed deposit in GTB or any bank, what is right. So what you do in that instance is that money that you have seen, you recognize the time you initially deposited, that amount of money there. And where is that money coming from? Is it coming from another bank? Or are you doing, a fixed deposit to GTB, within GTB itself? It's very much possible, right? Or are you moving money from one part of your bank account, to another bank in form of fixed deposit? So one thing you could do is this: you could actually create a ledger account to monitor specifically your fixed deposit. We could have a GT Bank, fixed deposit, set of amount, and we could have our normal operational account with GT Bank. So we could create two GT Bank ledgers, but detailing them in description to say GT Bank fixed deposit. That's a separate ledger on its own, right? And when we are having dealings with respect to that particular fixed deposit, we would select that ledger, right? When we are making some payments into that ledger as a fixed deposit, we select it, right? And when we are dealing with other operational, activities with respect to GT Bank, right, as a payment platform, we would select the normal, GT Bank ledger. So you could have two ledgers like that, right? And let's say you are dealing with bank transfers from one bank to the other. You need to know that QuickBooks Online has that feature here called transfer, where you could now select the bank you are transferring the money from and the bank you are transferring the money to. And in this case, it could equally be a withdrawal, from your money on hand, from your money in the bank to cash on hand, or for interest. If you do that, you can easily erase that by form of bank transfer. And you input the transfer amount. Then of course the date is very, very important. So that is how that works. That is how that works. And I hope I'm audible, right? So now we've looked at transactions. We've looked at transactions that QuickBooks Online, actually have when it comes to, activities with respect to businesses, right? We've looked at that extensively, right? So let's now look at reports. Let's look at reports. So let's see how meaningful our reports, would look like. What are those reports that we need to consider, you know, as a business entity? What are those reports we need to look into, right? And let's just get right into reports. You know, and that is how you know that would work. Do you understand? So we are moving into reports, and we need to look at how do we generate report as to our financial statements, income statement, how is our business performing, and all, how do we look into our statement of financial position. Let's look at relevant customers and suppliers report. Remember, we all started from creating master files, and our master files translated into transactions. Our transactions would equally transfer to be able to, advise properly, mainly looking at the report. What does it translate to when using a system, right? So those are what we want to look at. And categorically, you should be able to make use of what we call report parameters. When you are using a system, know how to use appropriate report parameters to be able to get a desired report. You cannot, let's say you want to generate week, right, or a month in question, and because you are now generating a year report, and you think you want to make your decisions on that, that is a wrong approach in that instance. You need to know how to make use of your report parameters, specifically, using QuickBooks Online, accounting software, right? So let's dive into our report. Let's look at this, and I hope you can still hear me clearly. I hope I am very much audible, and I hope you can see my screen, right? So to do with reports, we go to the report module here, right? So the system has a robust report module where we have quite a number of reports. It has a long list of reports that we want to start with, our relevant financial statement report. We have our standard reports, we have custom reports. Those are reports that we must have customized based on their parameters, right? And we equally have management reports. So now, QuickBooks Online has some set of reports, right, that you can actually generate, which it's called management reports. These are different from your normal standard reports. And your management reports, you have company overview, sales performance report, then you have expenses performance, where the system would actually give you with respect to trends. You could generate a specific date range that you want, and you could click on view to say you want to view, what, and the system will generate that in form of a detailed management report, in PDF for you. And the system would equally give you, your analysis, right? Like you have it. So I can choose to download this, management report, right? And I can choose to view it. So this is my management report on expenses based on the year I have selected, right? You can see that the system is showing me P or L, right? For a particular year, you can see detailed, well detailed enough, and I can use this for my management reports, right? And you can see the system is equally showing me my account payable aging analysis, right, and expenses by supplier. So these are quite a number of beautiful reports that QuickBooks Online would give you in form of management report that uh, would be generated, right? But before we look extensively into that, let's look at the standard report. These are the reports we can generate ourselves, right? We can actually generate them ourselves, export them to Excel, export them to PDF, and have them printed if we want to, right? So some of them are in favorite, and some of them are under business overview. They are in sections actually. You have some as called who owes you, right? Because QuickBooks Online is actually naming it as that because it wants to, as much as it can, uh, be relatable to even non-accountants. So those are your liability, and also sorry, those are your receivable reports rather. and you equally have sales and customers reports, who you owe, which are your liability in this case. Then you have, of course, your expenses report, your VAT reports can actually generate VAT report as well. So know your VAT input, your VAT output, and the VAT that you are actually applicable to remit to FIRS, right? So it has that report as well. And for my accountant, has your relevant ledger report. So now let's start with our profit or loss report. Note that it's been named profit and loss here, but the appropriate name in this case is profit or loss. And we'll see the presentation is actually IFRS, compliance here, right? So let's look at our profit or loss report, and this is where we will get to see, the cost centers we've been selecting, where it comes to play, right? How we can easily work with them, how we can easily work around them, right? Okay, so this is actually, our profit or loss report, right? Let me zoom in a bit so that we'll see it, much clearly, right? This is what our profit or loss report, looks like, right? And you can see our revenue. Remember, we created, relevant revenue ledgers, right? For laptops, for repairs and the likes, and for phones. So here we'll be able to see our revenue line item, see our income, which is our revenue, our cost of sales, ledger, we have, of course, we are able to see our gross profit. Then, of course, we are seeing our expenses, our relevant expenses that we've incurred, over time, and you will see, total net profit or loss, for the period, right? But note that there is something called report period, and that is your report parameter, right? We are only selecting here to say this year to date. It simply means we are viewing the report for the whole year. If you want to view a report for a certain month, what do, right? We can actually make use of the custom dates, right? Where the system allows us the flexibility to say, I want to generate from first, to, if I say I want to generate from 1st of January to 15th of January, the system actually allows for that, right? If I want to generate from 1st, of January to a certain period in March, or I want to generate for the whole year, right? The system allows you to do that, right? So now I just want to generate for January, right? I want to generate from 1st to 31st of January, and I want the system to display, my totals only, right? Do I want non-zero activities to be shown? I only want those that are active, right? I only want those are ledger account that have figures in them, right? Do I want to compare it with another period? Do I want to run a POL comparison? Right? If I want, I can actually select, the period at which I want to compare, this specific report with, right? And of course, my accounting method always set it to accrual, right? So I haven't done that. I can click on run report, and I can choose to save, these as a form of customization, so that when I want to generate, similar report, it's very, very easy for me, to do. So now I want to click on run report, right? So that my parameters will be shown, with respect to those, reports that we have indicated. So now another beautiful feature, that we have here is to say that if we want to include, right, you might want to include, your relevant call centers. Sorry, let me change this back to accrual. You might want to include your relevant, call centers like we have selected. At first, the system actually allows you, to do that, right? The system actually allows you to do that, on this note. So I can say display columns by, if I, this is a summary, right? But remember, we created what we call category. We created what we call classes, which we enabled. We created HP, Samsung, and all of this, right? We can actually install the system. We want to view our report, by classes. And the moment you select that and you click on one report, you will see that your system would now, break down those reports into your relevant call centers, like we have. We remember we had admin, we have HP, we have repairs, we have Seagate, we have Samsung and the likes. And we'll be able to see, here it makes more sense for us as a management or for you as an accountant to say, okay, revenue, right? This is the total revenue we've gathered from HP, see the total. From repairs, see the total, 80,000. From Seagate, see the total, 210, right? And we can see also our cost of sales. See the cost that we've incurred on HP, the cost of item, the worth of item that we've sold with respect to cost, for HP, irrespective of it being an Elite book, it being a Pro book or anything at all, right? The total here is what? 110,000, right? That is our cost of sales, direct cost on HP, right? On Seagate is 140, right? And you can see them, right? And here it makes reports and insights much more beautiful. And see, on admin expenses, on admin is not having, any contribution to our profit at the end of the day, right? And with respect to our expenses, you know, see at the expenses we are incurring. If there's anyone that is directly related to HP, we can actually link them at the point of doing transactions, right? And this is the beauty. That was the beauty of selecting classes. That was the beauty of selecting locations, because we could either say that we want those figures displayed by locations. And once we do that and we click on one report, you see what happens. So we are now seeing our profitability based on Abuja and Lagos, and it will be based on any of our parameters that we must have selected ourselves. So this might not even be shown to you by several other QuickBooks Online vendors out there, right? But that is how it works, and that is how you can make QuickBooks Online work for you. So you can see this is one of the beauty of actually attending this class, right? So these are the reports. Okay, these are the reports here, right? And you have a couple of other reports, and you can always export your report to PDF and of course to Excel. And you can always print it or send it via email to PDF here. And of course, save as PDF, and the system, would actually download that report for me. Right? It goes on and on like that. Right. So that is just one of the numerous reports you might want to make use of. And remember, your classes in that case, your course center could be anything at all. So you have your statement of financial position also there. I can always open a new tab and have reports generated there. Okay, so Mark was asking that why is the accounting method always set on accruals and not cash? Remember, we showed us that yesterday at the point of configuring the system to say that the best way, the best method to actually keep your record is actually accrual, right? So, and when you are generating report also, it is always good, you generate your report in accrual. So you would only be using cash if it is actually unique, if that accounting method is actually unique to your firm, right? And we explained the difference between accrual and cash yesterday. So, right? If you didn't get that, you might you might need to make reference to our yesterday's video, right, to be able to get more insights on that. So yes, for our statement of financial position, so we have our assets, right, which could be current assets in nature, or long-term assets, which will be non-current assets, which is our fixed asset and the likes, and we would have total assets here, just like we have, right? So you would equally have your liabilities aspect and equity, aspect, of the whole thing here, right? And you will be able to generate, your balance sheets, in that case. And individual information, you can actually click to drill down to say, okay, how do I get to this 35,000, or what is the makeup, with respect to my inventory, what is the makeup of this 4.360? I can click, the figure, and the system will show me in detail activities that are mounted, into such, right? Activities that are mounted into such. You'll be able to see that. So now I can choose to go one step back. Right? I can choose to go one step back there. right? And that is how you can actually. But one thing that is very, very important in all of this report is your report parameter. Your report parameter goes a long way, right? And you can also use it to compare, right? Previous year or previous period and every other thing. So QuickBooks Online allows you to do that, at a single click. So other reports that are there, several other reports. For instance, you want to generate your receivable aging. You want to know your age analysis with respect to your receivables. So how much are my customers owing me? Which customers are owing me, and how many days has that balance? How many days has it took? All right. You can actually generate report on that. A report that would help you is aging analysis, which is equally called AR aging summary. At the same time, your report filter is equally important. We could say as at the ending day of January, you see that these figures would actually be different now. So Progress Limited is owing us 544 and it's over 91 days. That's because we are generating the report as at today. But if we are generating the report, know, as at the last day of January, you will see the difference. And we click on one report. You see that this amount has actually, transcended into it being first, between 1 and 30 days, right? And you see that West Atlantic is still within the 30 days interval here, right? So that is the difference between a report parameter. That's the key importance of knowing the right report parameter to use, right? Always ascertain your date. It is very important when generating reports. So we have quite a number of reports that time would not permit us to take, right? You equally have a report called audit log. You have a report called audit log that could be used for internal audit or system audit, as the case may be, right? Let's say you're an internal auditor or you're an external auditor, or your client is using QuickBooks Online. So you can actually use the audit log report, for your advantage. So for an internal person, or you head the department, and you're making use of QuickBooks Online. So you could come to say, oh, you want to generate report on all users, for this specific month, and you want to generate, is it with respect to transactions that they posted, is it with respect to transactions that were deleted or voided or edited, right? You can actually generate reports, or as at when users signed in, or as at the moment when they signed out, or the moment they generate statements and all, can actually generate, within the system. So if I say I want to generate all the activities that had happened in this month, right? You see that it's saying user, Aziz, right, actually entered a journal, and I can choose to view the journal that was posted by Aziz, right? Aziz equally entered, an expense, right? Recorded an expense. Choose my months to say I only want to generate from first. What had happened within the system from the first day of December till this present date. Do you understand? So audit log report is a report that you can actually use when working with QuickBooks Online, right? So that's one of the beauty, of working with right, as good as QuickBooks Online. So there are quite a number of reports. You have your payables report also that will show you the breakdown of what you are owing, and of course to the part of the individual suppliers that you are owing that amount. And another report you have is with respect to your inventory, right? So that will be the last part that I want to take, so that we can just stick to time. So yes, at the end of a certain period, you could be asked, okay, you've helped us with your income statement. We can see your statement of financial position, which is also called your balance sheet. We can see your receivables and payables, right? But can you tell us the value of inventory you have on hand? The quantity and also the cost, which will translate into the value. So you can actually generate a report called inventory valuation report. Your inventory valuation could either be in summary or could be in detail, right? And I could generate that inventory valuation report, right? I could open it in a new tab here. So that's so as to see here. So I can generate that as at what period do I want to generate this valuation report for? As at today, right? I could select my period as at today, right? And I will click on run report. And when I run report, the system will give me individual inventory items, in line with their categories, right? Individual inventory items and the quantity we have on hand, with the asset value, right? And you see that the system is giving you also the average cost, for those inventory items there, right? So it's simply saying we have 13, 15 value, 15 quantity of an item called iPhone 13, and this is the total value that they translate to. And in total, our worth of inventory is 4.3 million, right? And we can see here also, you see the importance of categorizing your items, right? See the importance of categorizing your items. So my system is telling me for all items that are under Apple, their total valuation is 1,065,000, right? For those ones that are under hard drive, the system will list them out for us. They are 60,000. Look at laptops, HP EliteBook and HP Pavilion, and I could choose to close, no, I could choose not to expand them, right? And you can see the beauty of categorizing when we were creating, those categories yesterday, right? So we can generate our report details, or uh, in summary. So yes, that's just some of those reports, and of course the system equally has your trial balance report. So there are quite a number of reports that you can actually play with on your own, right? And if you are still having any further challenge, or you want to raise some questions, please feel free to reach out to us, right? You can actually reach out to us. We'll be willing to assist you, right, on any of these reports. Then the system equally have statement of cash flow reports, right? Statement of cash flow reports would give you, with respect to your dates, as at a particular date, you'll be able to generate, your detailed cash flow report. You can see, cash flows coming from operating activities. Your profit for the year will be stated. Then your adjustment for non-cash, income and expenses will be listed out. Then, activities from net cash from operating activities would equally be listed, then also from investing activities, and you would have your net cash flow, amount at the end of the year. So this is also with respect to, your period that had been selected. So the beautiful thing is that your QuickBooks application helps you do some of these things, right? But it's all starting from somewhere. Where is it starting from? Charting your ledger account appropriately. Remember, this cash flow statement is calling from, the ledger account that we must have created, right? So that's it. And we can always export this report, to PDF, to Excel, and the likes. And, that's just one of the beauty of using an accounting system. So it's always good when you use an accounting system such as QuickBooks Online. It's quite robust, and it helps you in doing so many things, and the report also. And you can easily search for your report, the report you want to generate straight up here. You can see your purchase order that are open, is there any outstanding bills, which is supply invoice that you are yet to pay. Your VAT report, you can actually generate, your detailed VAT reports to here, within a certain period, right? You can always generate within this period to this period, what is, my VAT report looking like, from 1st of January till end of January. I could do that and run my report, and I would see, you see your total sales, total VAT collected on sales is 79,500, right? Because we are only generating summary. So if you want a detailed report, you generate your tax detailed report, right? And you will see the total VAT that you paid, that you incurred on purchases, right? And you will see the total amount that it's claimable or that is remittable, to your relevant, VAT authority. So that's equally another beautiful one. So it is on that note, or on that beautiful note, that I will be entertaining your questions, right? I'll be entertaining your questions, and there are a couple of reports that would always help you, But for just as a take home, I want to let us know also that when doing audits, right, there are a couple of reports that will be required from you, just for you to know that yes, not just that you are a business person or you are an accountant, uh, you you might be requested by auditor to say okay, or in line with respect to preparing for your upcoming audit. Always know that your auditors would always require you to generate your trial balance, your individual receivable schedule, just like your age analysis. Do you understand? Your payable, which is your suppliers age analysis, then your inventory valuation, like these are relevant reports that will be required. And in some cases, they could ask you for account transactions report. This is a detailed report on in individual ledger account, right? Individual ledger account. And the system will be that you will see for my accountant, right? You will see detailed general ledger reports, right, that you can actually generate, and you see transaction details by account would work with respect to what I was trying to explain to us, right? And you see your trial balance report among several other reports there. So you can play around these reports. Play around these reports. If you have any observation or if you have anything at all, please feel free to let us know, and we'll be willing, to assist you any further. Please let the training not end here. We want to maintain the relationship. We want to always work with you, not just on QuickBooks, on any software or any application that you are working with. Okay, so I'm very happy to have you in this section, and you yourself can tell that what we've gathered from this training is far way beyond the amount that was actually paid, right? So it's worthy to note that this training we charge as far as 20,000 and above, right, for this virtual edition of the QuickBooks online training, right? But our management is looking at, we want to reach out to more people. We want to let people enjoy the value of working with Droidedge Consulting, right? And trust me, we look forward to also seeing you in a couple of our trainings. We do trainings on Sage, we do trainings on Zoho applications as well. And we do trainings on ERP systems like Sage 300, Sage 200 Evolution, and we do trainings on Microsoft Excel. So should you also require our services to work with you on your softwares, please feel free to reach out to us, right? So that would actually be the end of today's training. Please go through your manual. We shared with you a manual, in fact, a detailed manual at that, that you can always work with also as your reference material, right? We shared our class exercise with you, and you have the training outline that you can always work with, and please practice. Let's see, let's work together on some of these applications. So remember, we are from Droidedge Consulting, right? And just like we keep saying, we are a team of consultants, right? We don't just customize or we don't just implement applications. So we don't just even come to your business to say, oh, this is the application that is best for you. We'll work with you, sit with you, meet with you, gather your needs, recommend an appropriate application. If you are using an existing application, we can look at it and see how best can we enhance this set of application for you. And we'll do trainings and support. And of course, we are partners with Zoho, Sage, Microsoft, and we do QuickBooks related applications as well. So yes, these are a couple of activities that we do, right? And of course, these are just few of the applications that we equally support. So please, if you want to reach out to us, these are relevant phone numbers, email address, then our website that you can always, and please endeavor to follow us on our relevant social media pages. So we share tips, also couple of tips on how to work on Excel, work on some of these applications and its promises, and we keep you posted also on our future trainings. Okay, so please, we all hope we really enjoyed the session, and please, you can still drop your questions and we'll entertain them. And please feel free to post your feedbacks also on the created group chat. We look forward to relating with us well via the group chat platform as well, right? And this promises to be very much interesting as we proceed, as we go ahead, right? And thank you so much for your time. Thank you so much for your time. It's been an amazing time with you, and working with us all, as is actually a very very good one. Okay, so let's see if there are a couple of questions, and if you would like to say anything, we can still give you the mic. There is no problem. Just signify by raising your hand. We'll give you the microphone, just so just one person close the session, right? So you can please signify by raising your hand, so we give you the microphone. Then you can just say one or two things if you feel like, before we then call it a day outrightly. Okay, so you can raise your hand through the raise your hand icon. So you can raise your hand, from the reactions. Okay, so in the absence of that, okay, so
Yeah, I think we do have Collins raising his hand, so we'll give him the microphone. All right, Collins, you can unmute your mic now to ask your question.
Okay, can you hear me?
Yeah, definitely, we can hear you.
I really want to say thank you to our facilitator and to you for this great training. I really enjoyed every bit of it and I got a lot of value. Thanks to Droidedge Consulting for this great training. I really appreciate it. Now, my question is I'm actually connecting with my phone, and right now I don't have any computer system or laptop. I don't know if I will be able to kind of apply the knowledge I've gotten out using my phone. And if I use my phone now, will I still be able to kind of, will it be, I don't know how to phrase my question. I'm just trying to say, after using my phone now, will I still, as in, will using the laptop also be the same kind of experience? That's my question.
All right, Collins, thank you so much for the uh, uh, appreciation. And as for your question, you would actually have a similar experience, using your mobile phone and as well as using your computer system. So believe you me, QuickBooks Online is an accounting software that can be accessed, through your mobile phone and the computer as well. So you would have similar experience. The only difference is, like you said, your mobile screen, the screen of your mobile phone is not as wide as that of a computer system. So, but you would definitely have a very good and similar experience, using both.
Okay, thank you, sir.
All right, you're welcome. Okay, somebody's asking a question in the chat. Let's look at it. Okay, so what's the difference between Sage and QuickBooks software? All right, Sage and QuickBooks, they are two different accounting and ERP systems. So when we talk about Sage actually is a manufacturer of different products. Some of them are accounting software, some of them are ERP, solutions. Organizations will have to choose which of these manufacturer you are actually going with when you are implementing accounting software. So, for one or two reasons, based on one or two specifications, you understand, entity would need to choose which accounting software they would want to use. Sometimes we consultants, we do advise, after reviewing their business process. And because we know that at least there are one or two features that are different in this accounting and ERP software. So take for instance, if we want to compare State Business Cloud and QuickBooks Accounting Software, I will tell you that in QuickBooks Accounting Software, it is possible for you to actually, enforce some of these reports, or we say cost centers. So, but if you're an organization that cost center is not actually very necessary for you, then you might not even consider using it. But some organizations that are very keen on cost center, if they decide to use a business cloud, it means that they do not have the luxury to enforce it. And that is what the manufacturer has built into the solution. So you would not be able to enforce that. So if it is important for you to enforce it, they would rather advise you, instead of going for Sage Business Cloud, rather go for QuickBooks. You understand? So many other things like that. On the other hand, we have Sage Business Cloud having some of this feature we call client portal, suppliers portal. This client portal will allow your customers to log in into their portal just the way you log into your mobile banking app to view your banking statement. But you cannot do the same on QuickBooks Online software. So, we can go on and on and on. But after we review an organization process, we can tell you categorically which one is good for you. So, but for you, the users, if you are not the organization who is implementing it, if you are an accountant there, believe you me, the consultants who implement for you must have considered some of these factors before making decision for your organization. And in some cases, some of these factors are not considered. So that is why there's always a need for people to always review their accounting process. It might be as a result of the fact that some of these, conditions are not in place when this software are being implemented for your organization. So it might just, come on board later. So that is why we'd always encourage you to, you know, always work with your software consultant to always come, regularly to review your business process in line with whatever has been configured for you. And we as Droidedge Consulting, we also provide that particular service also. We come into organization, review your business process, we listen to your sales process, your purchase process, your procurement process, your employee remuneration, how you actually do your monthly payroll, and we check what has been configured for you to ensure that what has been configured for you is in line with your process. So in line with talking about payroll now, not just accounting solution is what we configure. We configure business, CRM solutions and payroll, HR and payroll solutions. So we can always let us know if you have issues relating to that. So if there's any other questions, we'll take. And if there's, okay, I think we have uh, Rahim wanting to. Yeah, he raised his hand. So Abdul Rahim wants to. He needs to talk. So hello, Abdul Rahim, you have access now. If you would like to
Can you hear me?
speak. Yes, we can hear you, Abdul Rahim.
Okay, good day, the facilitator. I'm very much happy for this training. Seriously, I even thought the thing is not possible because me seeing your advert on Facebook, like, okay, is this thing scam or is it not scam? Though I've been clamoring of getting the training because one thing I have with this Nigeria, or let's say a place of work, if you are searching for work, is you having experience an accountant because I'm a qualified chartered accountant. So anytime you seek an employment, they will tell you, do you have so knowledge about this accounting package? I will just look at myself, I don't have anything. So I've been bothering my mind. That morning, every morning, I just wake up, I just pick my phone, checking my Facebook. I just, yeah, this is a training that is going on. Is it possible? Okay, let me put it a try because though I see the fee that the fee is small, so that was convincing me that okay, maybe it's a scam or not. Let me just give it a try. So I give it a try. I chat you up, they reply me via message, via WhatsApp. Okay, I introduce my friend as well. Okay, my friend, come and do this thing. This thing can be an opportunity. In short, I'm very much happy with this, and I'll be very much happy. As you said earlier, that any subsequent training will be posted on our WhatsApp, which I'll be very much happy if you can be doing that so that anytime this thing opportunity open, we'll be enrolling, and before you know it, I too I'll be a guru in having accounting package on me. Thank you very much, Devastator. I'm very much happy. Thank you.
All right. Thank you so much, Mr. Abdurrahim. Really appreciate your concern. I must actually admit your courage. One of the reason why a lot of people are actually skeptical is actually the amount we charge for the training. And believe you me, this is a very intentional. We are very intentional about the amount we actually charge. And there are quite a lot of people who provide similar training. Believe you me, you would see online 20,000, 50,000, 70,000, and even the quality of the information they do provide. Believe you me, it's far below what we will be providing for you. It's not just what we provide during during these 2 days of training. We also provide you, this recorded session, which you can always refer to as any point in time to play back. And if you look at, we have actually shared with you the class exercise, so you can always, open this class exercise to go through it. And if you have any challenge, you can read the manual. We have provided you also with a detailed manual on QuickBooks, and that is how we do for all our trainings. So if you attend our Sage training, you attend any of them, we provide you with manuals, training videos, and we also provide you with a certificate. So these are actually, far beyond the fee that we charge. But we deliberately want to do this because as consulting firm, we actually want to bridge the gap. We've always noticed that many times when we go, to train, and or we see our clients, they actually want to recruit, they would always lament to us and let us know that a lot of people are out there, they are not employable. And the reason why they are not employable is that they lack some of these basic knowledge. And it is not actually their fault. What we are being taught in school is totally different from what is actually expected from us in the market environment, in the place of work. So that is why we're actually providing this training. So if we want to stick with the regular 50,000 naira, 30,000 naira, believe you me, we would actually reach less number of people. But we want to make it as close to free. We would have done this training for free, but we know that quite a lot of people will not even take it seriously, because if you just come online and see that, oh, there's a free training, people would not take your time to join. And so that's why we just want to ensure we're actually charging a very token fee and providing you with this much training. So the way you can actually show us appreciation is to always encourage your colleagues and friends to join our subsequent training. And most importantly, if you have a need for our service in your organization, or you have anybody who might be interested in the service we provide, that is actually a way you can use to tell us thank you, and would actually appreciate that. Lastly, we would also be dropping a link to our Google page, where you can always write a review about the training. This would help us to encourage subsequent people who is reading about this training to know that, oh, there are a couple of people who have attended this training, and this is what they are saying about it. So thank you so much, Abdulrahim, for your comments. We would always let you know when we have subsequent training. All right. Ola Jire would like to speak. So yeah, Ola Jire, you can talk now. Ola Jire. Yeah, I'm trying to. Okay, Ola Jire, you have the mic now. Would you still like to? All right. Thank you everyone for your time. So we'll be getting your certificate, anytime soon. Could be today, tomorrow. We'll ensure you get your certificate, and we'll also, post regular updates to the WhatsApp group. If you are yet to be added to our WhatsApp group, please you can send us a direct message. We'll ensure you are added to it and you get all the necessary information. So do check your email regularly, as we'll be using the platform to send you updates, and we'll be sharing your certificates, including today's training recording. So we'll also be sharing it with you as well. Do endeavor to check your email for that. Thank you so much. This Okay, Olaje, you have the mic now. Would you still like to talk? Okay, I guess.
Aladio, right? Okay. So I think he's not with his device. Okay. So can just so we look forward to, of course, uh having a much more, mutually benefiting relationship with you all. Yeah.
Yeah,
All right. Thank you.
thank you. Bye for now.